new video series by Triley. Through this series, we aim to bring to you complex legal issues emerging out of regulation, legislation, and judicial pronouncement. Some of these changes have a profound impact not only on our businesses, but also on the way we choose to live our lives and organize our societies. The videos are available on our website and on our newly launched YouTube channel, Trilegal Unlocked.
Hello, good afternoon, and welcome to the Mint India Investment Summit. We are on day 3. We have been through 2 extremely engaging and deep dive days where we've tried to set up the imperatives of what to look forward to in the days ahead. Just as we've been saying for the last 2 days, I'd like to reiterate that our thoughts and our condolences are with those who have suffered losses through this very, very disturbing phase that India is living through at this point. And our only wish for anyone who's joined in to watch this or as a panelist is that you stay safe and your family does too. Part of our conversation over the last couple of days has really been about how to rebuild from here. As you've heard, it's reckoning with uncertainty. And that's what we're going to focus on. That's what we're going to double down on in today's conversation. We're looking at new opportunities where India can indeed seize the moment, whether that is in the startup ecosystem or whether that's in existing spaces like real estate. Where is it that India can choose this to be a pivot moment and actually start doing something even more stronger than what it has done before? As always, we're available to you on social media. On Twitter, you can tag us and tweet out to us at hashtag MintIIS. That's what we're tweeting from, and we'd love to hear what it is that you're taking away from this conversation. A big thank you, as always, to our sponsors as well. Our presenting partner, Trilegal, our co-sponsor, MIDC, Maharashtra Industrial Development Corporation, and our associate sponsor CoinDCX. Lots lined up over the course of today by the time we wind down into the evening. But before anything else, the first one we're taking on head on, and this promises to be a cracker for conversation, is what's happening in the startup universe. So before I present my guests for that conversation, here's a quick and interesting factoid about the startup space. Okay, so as promised, this is where we're talking about what's happened with the startup universe so far. Where does the potential lie? And does it look like the startup space is poised for even larger leaps given the situation that the larger economy is living through in these COVID times? Let me introduce my panelists for this conversation. Ashneer Grover, CEO and co founder of BharatPay, Sujit Kumar, who's co founder at Udan, Sumit Gupta, who's Chief CEO at CoinDCX, and Yogesh Singh, partner at TriLegal. I will be steering this conversation this afternoon with these guests of ours. Thank you, folks, for joining in. First and foremost, I hope you and your families are safe. Thank you for making time for this conversation, and I hope it is of value for people who are listening in because there's been so much focus on the startup space. So I thought we might start with giving all of you a little bit of time to express what it is that you're thinking about, particularly in the landscape that we're navigating, and then maybe we could get into a deeper conversation about what lies ahead, really. So let me start with Ashneer Grover. Ashneer, if you'd like to make your opening comments first.
Yeah. Thanks, Mitali. So no, yeah, I think the country is going through whatever it is going through, right? What you see on the news is real on the ground. I can tell you because I also come to office every day, right? Being an essential service, partly our office is open, and we also get to know what's happening at the shops real time because we power a lot of transactions. So the reality on the ground today is that uh, transactions offline are down some 40%, right? And that will give you that's a benchmark of where the economic numbers would also eventually come out to. Of course, there will be certain sectors which are doing much better, like pharmacies, right? The business is up 50% during the same period, right? While everyone else is broadly 40% down. So I think the situation on the TV and the situation on the ground, there's a good coherence. From the startup perspective, even the last time when the lockdown happened, when the unlocking happens is really the when the tailwind comes in, and I'm sure it's going to be no lesser this time around, because this time the fear of COVID is very, very real with people, because people have seen deaths. Everyone individually would know at least 25 people who are infected. That was not the case last time, right? It was saying, okay, we are taking a precautionary measure, maybe going a step too far. Things seem to be bad in the US, right? Right now, things are bad on the ground here. But I think when the unlocking happens and when we are beyond this, all startups, anything digital, in fact, not even startups, anything digital, in fact, is set for another boom. But now, right now, the focus is helping people out on the ground and making sure we can do our little bit to ensure, the virus does not spread. And we are doing that through digital payment and ensuring, people can say pay safely or through a QR right now.
Thank you for that. Sujit, let me try to ask you to do the same thing, contextualize your industry within the larger universe of what's happening with COVID.
Yeah, thanks, Mitali. So, like Asneer is saying that the situations are very, very grim and sad on the ground, right? Um, Workers are infected, your colleagues are infected, their families are infected. At the same time, you have to also run your operation because we come in the essential commodity because it's supplied to all the retailers who they can sell those essentials to the customers. Yeah, so I think for us, like Asneer was saying, it's not like last time the lockdown. Here, there it's more like it's in the pockets. There are like Bangalore. Bangalore is complete lockdown. The same way other geographies are locked down. So every day we are dealing with those operational challenges on the ground, more coordinated way rather than last time it was the chaos because even authority was not very sure what the meaning of lockdown. So at the same time, like Asneer was saying, the business is down for everyone, and Um, and it's more about how people are scared also this time, because somebody is getting died, or in the serious mode, somebody is not getting the hospital's bed. They are looking for those help. Nobody can help with the surety. Hey, this for sure, I will help you. So there is a very tense, personally it's very tense environment. At the same time we are running the business. I think, yeah, I hope in 3-4 weeks situation will improve. I think that's what I'm hoping.
Before I move to the next guest, I just want to say thank you to both of you for putting out such an honest and real assessment of what's happening. I think the first step towards, building any solution is to be fully cognizant of the threat that faces us. Thank you for being so forthright about how tough it is out there, even for your own businesses. Sumit, yours is not necessarily directly related to, what's happening on the ground, but give me a sense of how you're feeling about the landscape so far.
Sure, Matali. First of all, thanks for inviting me here. I think we are living in extraordinary difficult times, right? A lot of things are suddenly changing. For all its faults, COVID had disturbed the economy. Many industries and startups or people got affected. Fortunately, with respect to our industry, it's very digital. It's digital in nature, where we don't have on-ground operations. So our business was not affected as much as other industries. I think the way I'm seeing this is the world is quickly moving towards a digital economy from a physical one. And Ashneer and Sujit already mentioned on what the situation is there in the ground. But in the same time, we are seeing a lot of shifts, or the this has brought in various trends that were not seen before, and this has also worked as a catalyst for companies or entrepreneurs to grow the business, or maybe pivot their business model, or do things differently. I think this is something where people have to take some hard calls, change their business model, or do things, or in fact solve problems on the ground. I've seen hundreds of my friends entrepreneurs who are doing work for the on the ground for the COVID relief efforts, especially the crypto industry in India and globally has also done a lot of work in this. I think everyone relates to the cause. And talking about the industry part, I think since the Supreme Court judgment in March of 2020, there's massive awareness, about crypto as a whole. A lot of people have started their investments, and for us, we have almost increase the workforce by 4x. And for us, for such a lean or a nimble startup, fighting the COVID thing and then completely shifting to a remote culture where everyone is working remotely, and also catering to the growth that we are seeing in the business, I think that was difficult. But because ours is a very digital heavy business, it was not as difficult as what other industries or other players would have seen.
Mm. Yogesh, if I may ask you to frame your thoughts within the context of my question, because it's not to say that the situation is tough. I mean, if anything, it's actually been a really, really strong start for startups, as a year. How do you think the rest of the year will shape up? Because you're looking at this one step away at the entire community.
Thanks, Mitali, and honored to be part of this panel. Let me start with saying that this last 1 year has been a very interesting year for the startups that we've interacted with very closely. They've taken on the challenge. Startup means disruption. Disruption means somebody or the other gets impacted. You create a new product, a new way of servicing. And there have been opportunities plethora out there. We have been in the midst of from a few 100,000 to $1 billion fundraisers in this period of time in companies which we can truly call as startups, which were not there in the last 4 or 5 years. I think my co-panelists talked very, very correctly that the last few weeks we were not expecting, and it's come off as a surprise, the kind of steep fall in business activity that has taken place. But I do view the longer term slightly differently, and I'm assuming that my co-panelists would agree with that, is that I do see a lot of pent-up demand. I do see companies being better prepared than the last set of lockdowns. I do see there being greater demand. I do see there being greater focus on digitization all around, right? and therefore, I do see that industry will, once vaccination kicks in, and once uh, enough number of people have gone through this mess. I'm personally going through this at this point of time, but I do feel that over a very short course of time, maybe in the next 2 3 months, we would have addressed this particular steep fall in business activity in a much better way than how we encountered it in 2020. I think the industry overall is in a very good shape. Investors are really keen. Many of our investor clients tell us that they probably see India as the number one opportunity out there. And our startup space, with the facility, with some interventions by the government, some good, some not so good. The ban on Chinese investment directly hit the heart of various fundraisers, but at the same time, allowing convertible notes and FECI investments have come through more easily. Those things have led that. So I do feel that this is a very interesting challenge, and the companies which show more resilient will definitely be looking at greater growth. And by the end of this year, the only debate we'll really be having is whether it should be growth or whether it should be profitability, backing down to real economics. So I would leave it at that.
Thank you for that. I'm sorry for what you're struggling with at home, Yogesh. I can tell you with personal experience, it's just takes a lot of patience, a whole lot of patience. Ashni, so you've got, potential and profitability on the one hand, and you've got investment potential on the other hand. So let's break up this conversation in those two parts. And I think on investment, there are no two ways to look at it. It's been a fantastic start to the year. I mean, half a dozen startups have raised about $1.5 billion already. NASSCOM's own indications of unicorns within this year is at a really strong figure. Do you think that startups in India generally have crossed that hump of worrying about profitability? I mean, money is there and money is interested.
Yeah, so it's a pretty interesting thing. I think, see, what you hear on the investment side, to me is inflationary, right? Saying too much demand, too less supply, so the asset gets repriced, right? So that's my genuine view. I think there's too much money being printed in the US. A lot of money has come back to investors because of IPOs. So on top of that, that's there. And वो सारा का सारा पैसा, everyone want to send it to India, right? So I'm not complaining. In all probability, I'm the beneficiary, and like a few other co-panelists here. But the fact is, hand on heart, it's inflationary, right? Like, um, prof how much money I raise cannot solve for my profitability.
Yeah.
That's liability, right? My profitability is going to be driven by my asset side, right? What it only does is gives me an opportunity to play out my plan, right? But the plan better be correct, right? Because if it's a screwed up plan in the first place, you can put 10 billion behind it, and the zilch will come out of it at the other end, right? So I think it's a great time if you are a Series C plus company. It's a great time. A lot of money is chasing you as against you chasing money, and therefore you have to be smart and efficient about raising capital, and most probably raise more capital than you need at this point of time. But don't buy the valuation you've been given, right? You still have to work and grow into that valuation, irrespective of whatever that number is, right? Don't see कि यार कुणाल को इतना मिल गया तो मेरा तो इतना बनता ही है, right? Don't go into that trap, right? Nothing's going to come out of, at the end of it. It's all about saying, boss, पैसे मिल रहे हैं, good. I'm lucky where the larger world is not, but I better use my luck and convert it into hard work on the other end now.
Sujit, you want to come in on that? I mean, in the last 2 decades, one can recall what I think 3 of these mad cycles of fund rushing in, or funds rushing in. Does this look like the fourth? Does it look inflationary? And should startup founders seize the moment or say, "Nahi yaar, mujhe abhi nahi chahiye. When I need it, I'll get it"?
So like you said, that I have seen all. So being a part of Flipkart, I'm right from day zero. I have seen that journey also, how the ecosystem was heating up in year 2012, 13, 14. And same way, I think it's not about number of unicorns at that time, but the whole ecosystem was setting up for the future. And that crash has happened, am I right? Lots of, so I remember there were 350 startups in the e-commerce space. I think finally that number has shrunk to a single digit. So that kind of disaster happened. And I agree. I think it's not also about it's a and how you wanted to see that. And valuation is definitely not a success. I think valuation is just like a supply and demand mechanics. I think valuation also give you a bigger threat. If you don't deserve that in the future time, then internal like employees expectations, because let's say if it's not growing what it has grown so fast to become a unicorn, and you are not growing for another 2 or 3 years, then people get demotivated. People see that, hey, we are not adding value, or we are not creating some product which is a natural fit in the ecosystem. So there are lots of threats with the valuation. I think one has to see that negative side of it. I think true valuations are how big your opportunity is and how much you need an investment to build those capability. I think that's how one should see that, rather than running. It's a rat race of like, hey, my valuation is bigger than your valuation. I think that it will end up in a disaster, and we have seen that multiple companies. I don't want to name them. Am I right? So we have to be very balanced. We have to be very balanced in our journey, how we are creating those values. So I think there is a rightly saying, create the values, valuation will happen. But though the Asni was saying that there's so much of IPO has happened. Investor has made lots of money. If you'll see those the investor who invest in our ecosystem, they have made lots of money. They are pumping in the limited assets of in our country. Definitely valuations going up, but we have to be very mindful. This will not sustain forever. This is just a one peak. It will come down. Then we'll see the Mayim side or disaster side of it. So yeah, I think we have to be very careful.
Sumit, let me tweak that question for you and ask you this a different way. Have investors started modeling valuations differently? Have they started making, those accommodations or looking at businesses differently than they did, say, 2 or 3 years back?
Sure, Mitali, what I can see is that there's definitely a lot of capital which is chasing entrepreneurs, founders, and I could see that happening. And on the other side, I think it's primarily because very digital heavy businesses, right? With this pandemic, a lot of things have moved digital, and a lot of businesses are also seeing traction. For example, in our cases, we have seen more than 1,000% growth in the business in the last 1 year alone. And the number of people who are focusing on investment, I think there's a lot of liquidity in the ground. A lot of people, from retail investor side as well. There's massive frenzy on the stock investments. Markets are going up and up. Crypto is also going up and up. There's a lot of capital that is there with the VCs who are also behind startups putting in money. I think yes, the benchmarks. I think it's easier to get capital now than it used to be earlier. I mean, I have myself in this space for more than 3 years now in the crypto space. I still remember in 2018 when there was a RBI circular, and then we had to run, that okay, we are round a very small series. Nobody was giving it, right? Nobody was giving it. Then uh, then now as with COVID and with the market getting hot in India especially is very hot right now. India is not just going to build for India, but rather going to build for the world. And as Ashneer mentioned, right, there are a lot of SaaS companies or Indian entrepreneurs who are building some solid businesses. So definitely there's capital chasing them. The way they are, it's all a demand supply, right? There are limited companies in India who are basically leading the space. They see that the traction is going to be there and you have tailwinds. So the capital just goes to the one who is leading or first or the second, right? So that definitely Series B, Series C funded startups who are profitable. Fortunately, we are a profitable business. We got profitable in the 7th month of operation. So we don't have to necessarily raise capital. But I can tell you from the fact that a lot of investors who were not even willing to talk or discuss with all of this all of this change in behavior with this pandemic and the way startups, some of the businesses have grown significantly, some of the businesses are struggling depending upon the nature in the industry they are in. But definitely I can see that the approach, there's been some leniency right? And it's easy to get capital primarily because there's so much capital available outside, and most of that capital is coming into India, right? And because and India is going to, I personally feel that India is going is going to give lot of big businesses in the next 5 years. It's going to be the Indian startup ecosystem is evolving, and it's going to be much larger than what we have seen in the last 5 years.
Mm. But Sumit, people actually put out comparisons saying, not enough has come into India. I mean, when you look at the India figures, it is a pale sort of fraction of what you're looking at in terms of the money coming into the US, for example, $143 billion there, China, $83 billion. Yogesh, are you getting that sense that people are sort of clamoring at the door to come in and get some kind of foot into the door with the Indian startup ecosystem? And secondly, is this about quality now? Because some of these investors point out that first you picked one, but now you can choose between 9 or 10 very, very quality ideas. You need to unmute yourself, please.
Yeah, am I audible now?
Yes.
Okay, sorry. So, see, I can only speak from the limited experience we have seen, and what we have seen is that there are too many investors chasing quality assets, and quality assets may be defined by the pace of growth or the kind of investors who are sitting there, or sometimes the quality of the founders, and many times a combination of all three. But what we've seen is clearly in the last 6 7 months that uh, large cap tables, which are already sitting with 5 or 6 big names, find it so much more easier to double up and make it a 12, 15 investor cap table. Um, so there is a clear sense of urgency with which people want to get onto those cap tables. There's a massive FOMO, I think, in many of those situations as well. That being said, I totally agree with Ashni on the point that and Sujit, that the founders really need to determine what kind of capital they really need. But in practice, we have very rarely seen anybody turning money away. There is just too much growth opportunity. It's very difficult for a founder to actually turn away money saying, I don't need more. Yes, there have been instances, but those have been far and few. Most of the times, you would find some or the other positive way of looking at growth and finding some new avenue or expansion, and take up the money that is on offer. So I don't know to what extent it is true that people could turn away. But yes, I would definitely like as a concept that founders do know exactly what they want, how much do they want, and where do they want from. That's the other part where I think our real startup segment is really maturing. We are genuinely seeing that it's no longer a question of let's make 10 investments, 7 or 8 of them will fail, one of them will ride us through, and we would have made money on everything. Uh, People are looking at genuine partnerships, networking, some leap of faith. They know there will be no security. Founders are not being pushed so hard for put options and those kind of arrangements, because people realize people have come. There is a signs. There is a certain sign of maturity in terms of those kind of fundraisers. But nobody puts a value for what kind of sustainable practices you are following in other things. So that those will always be a question. And like I said, growth versus profitability will always be a big question. But if there is money on the table, I have very rarely seen anybody turning it away.
Unfortunately, we couldn't have one of our speakers, Zerodha, as you might know. It would have been interesting to have him here because he was on record on Twitter talking about the fact that he wasn't interested in the money and he wasn't sure why people were chasing the money, because that's not what the focus was. Ashni, let me sort of turn to you on that front, which is the money is here. but what's happening with the profitability? And here you have a very real situation about the economic distress. I don't think any one of us fully understand the impact of a one-two punch, which is what we are now living through, and how things will look when we emerge from here. Look at household cash holdings and the way that's risen. People are scared. Medical exigencies are the highest in terms of their priority. um, how are you feeling about profitability for your industry, or generally the economic path from here?
Yeah, I think see, whenever uncertainty happens, people want to cut down on discretionary spend, right? What they can avoid, they want to avoid. Thankfully, for both Sujita and me, we majorly operate in the non-discretionary spend category, right? So as I was saying, even during this lockdown, we have seen grocery do well, as relative to the others, right? Still down, but it's still better than the others. And in absolute terms, pharmacy is even better, right? So my sense is that people will be wary of not doing the expenses they can avoid, because now the feeling is that you have to fend for yourself, right? Like the tax money you have paid is gone. Like don't expect anything from it. It seems to be the scenario. So people will say, okay, if I have to, quarantine at home and I have to put an oxygen concentrator at home and I have to put a nurse, I might as well save that 2-3 lakh rupees rather than buy that big TV or a mobile phone right now. So that seems to be the state of affairs right now. I think in general, profitability of startups, it started improving, right? Like for me, Zomato is a clear case in point. Right? At one point of time, I used to myself question saying, food delivery में पैसा कैसे बनेगा, right? But now I can see the numbers play out, and a lot of ex-Zomato folks work with me, and they are even amazed, saying, this seemed improbable a few months back, right? Forget a long time back. So I think one by one, as people start what it goes to go public, they will keep understanding it's not about just growth, right? It's about, you can even tone down a growth a bit, but you need to have that unit economics and profitability out there. So if the IPO markets reward the profitability of the 5 companies which are going to go public, I think a lot more of us will have a clear path saying, okay, what is the trade-off between growth and profitability I need to do, and at what point of time.
Hmm. Ashni, let me ask you this, and I hope you give me a candid answer, because, like you said, your industry is relatively insulated from what's happening here. But there are so many other startups from the services industry, tourism, hospitality, F&B, that are frankly, I think, having a moment of reckoning on whether they will survive this or not. Are we, as a startup ecosystem, talking enough and talking honestly about the level of distress that also exists amongst many of these founders and amongst many of these ideas?
But like distress story doesn't excite anyone, no? Like रोता हुआ इंसान किसी को अच्छा नहीं लगता. So it's a fact. For 10 of us who will come here and talk big things, there'll be 90 of others who will struggle, and but that doesn't make exciting drama, no, for anyone to speak about. I think सिंपल है यार, लाइक आपको सक्सेस मिलता है, 10 लोग आपके साथ खड़े होंगे ताली बजाने के लिए. फेलियर है तो हमेशा अकेला ही होता है. So it's no different for the startup world than it is for the real world.
Perhaps it's time to change that, both in the real world and the startup world, no? Sumit, let me ask you this, because I think you're perhaps a bit different from the others over here in terms of the regulatory challenges that you face. Here's where regulation can step in and actually help industries that do have the potential to grow. What is it that you need regulation to be alive and aware to right now in terms of your needs?
I think yes, for our industry, regulation becomes very, very important, right? And we have, I personally am in the industry for more than 5 years now. I have seen various ups and downs where government coming up with something and then Supreme Court overturning the judgment. And it's not the government's fault. I think it's the industry is new. The technology moves really fast. Then and policy just catches up with it. It just takes time. There's a delta there. Other countries,
That's
progressive
very
nations,
diplomatic of you, Sumit.
yeah. So I mean, for us, the times have been challenging from a regulatory perspective a lot, and not just for us. I mean, even common people who want to invest, right? They are also very concerned, and because there is no guidelines, no. Recently, I think now there's a shift happening, especially in the last couple of months. You'll see finance ministry, even RBI and some of the government officials coming up and saying that, okay, we understand, we want to move, make India more digital, and how crypto, can add to India stack and build a crypto India stack nation where we can solve the problems for remittance, or more and more capital can come into the country. Of course, for every industry, there is always the other side. I think the way government should look at it is how can we curb the negatives, right? Which is what the regulations will bring in, and how can we enhance or push the positives of it, because everyone knows, how it can, how blockchain can, shape up healthcare industry, or even supply chain, and how it can shape up the financial industry of the future, right? Already there are various use cases that are currently, that's current government is currently working on, and that's working pretty well. I think in order for us to reach a critical point where we use this technology for the betterment of the country, for the betterment of, the systems that we currently have, make it more transparent. Even simple things like donation, right? When we are giving donations for things like COVID, how can we make it more transparent? How can we make a system which is very open to everyone, and the funds are being utilized in the right direction? How can we create an open, transparent economy, right? Where everyone is having on the same level playing field, because some of the companies or the businesses, they how can we achieve financial inclusion? Because technology doesn't distinguish one person from the other, right? Whether it's a poor person sitting in a village, or it's someone sitting in Mumbai, technology doesn't differentiate that. But I think businesses, some of the businesses, they tend to prefer people who they can make more revenues from. I think with these technologies, I think with blockchain technology and crypto into the picture, I think there's a lot more India has to gain. And I think especially good thing is because it's fundamentally boundaryless. There is no boundary, right? It's a free economy, right? And I think this is with the talent pool that India has, with the entrepreneurs that India has. I think a lot of we discussed about a lot of industries shutting down because of pandemic, but there's also massive opportunities that are opening up. I think this is the time when we can tap on those opportunities, where India essentially can give rise to multiple dozens of unicorns in the next 5-10 years, right? And pick the right industry which is going to be the future, whether it is crypto, AI, ML, or whatever the right. Because of course, as we move forward, there are some industries which just diminishes, but there is also emergence of new spaces or industries where you have the opportunity. And that's where I feel that this pandemic has also killed many industries, but also given rise to various industries where people can do things differently and can make can create good opportunities out of it, leveraging the situation and the technology. I think that would be my say to it.
Yeah, it's a good pitch. Yogesh, are the regulators listening? Do you think there's going to be some activity in terms of regulations going forward?
I certainly hope so, that they are listening to so much clarity of thought that Sumit brought to the table here. Frankly, if you look at the overall startup scene, let's try and split it. I'm not saying it's a fair way to do it, but let's split it into three parts. One part being health tech and e-pharmacies, right? They have done very well.
Yep.
But why? Because the regulator did sort of come in and facilitate some of those. The questions regarding whether doorstep delivery was possible or not, whether you could actually online sell medicines and all that. These were all massive debates, and we were putting opinions after opinions on files. And companies were raising capital nevertheless. But those issues got addressed, and therefore those industries found much more stable fundraisers. Second being e-commerce, maybe offline retail, fintech, right? Again, there has been perpetual lack of clarity about this, but because the overall system was clear under the RBI regulations, those industries have really done well. We have some really solid companies in this particular space, in fintech and payments, which are doing phenomenally well and actually augmenting the government's objective of digitization and inclusive growth. Third being the deep tech startups, the artificial intelligence, the augmented reality, the Internet of Things, the robotics companies. I'm not too sure if they are really getting this kind of support that they should have been getting or should be getting today. I think they are developing despite the government. And I think there it is very important for somebody to pay attention to this, because a slight nudge and a good you don't need much. You just need rule of law, and rule of law is very simple. You know the rule, and you know that there is clarity about the application of it and the enforceability of that. And if that can be achieved in these spaces, we are bound to grow leaps and bounds in this deep tech space as well, which we are already doing very well. But I'm just saying that there is that opportunity which is out there. And so certainly, there have been a lot of good positives, but I do feel that this is a particular space which really needs a push from the government, because it is already right there, and we are on the map for every big investor, every big sort of company out there which is looking at the startup scene. So why not maximize the opportunity?
I'm not sure you mentioned EdTech over there, but I think that's the big one as well. Byju's will be quite upset for you having missed out on that one.
No, I wouldn't, because they haven't missed out on anything, right? So you don't need to mention EdTech today. I think all of us know enough. You need to put on the IPL and you know who's doing well today. So.
Correct. Why give attention to the class monitor, right? Sujit, I want to come back to you because you're an old hat at this startup space. On what I was chatting with Ashneer about, along with all these reports of all the money coming in, there's a KPMG report that says as many as 70% of Indian startups have only about 3 months of runway left, and as many as 80% have seen a sharp dip, in terms of their revenues and profitability, of course. Do we yet have some kind of safety net in place? Do we have some kind of system to support this community? Because it's such an amorphous group, startups. It's very tough to sort of put them into one basket and say, here's what you get in terms of.
No, yeah, Mitali, I think you have rightly pointed it out. Like people see that one success story, but there are hundreds of it which are struggling day in, day out. Am I right? And look, at the same time, if you go by data, overall, let's say, angel funding environment has grown massively in last 2 3 years. If you'll see the structured Series A funds have entered into this market, Series B funds. So I think there are lots of structure has evolved. It was not like unorganized. Here also, like the D fund also giving the angel kind of check. So all the funds are playing everywhere, but you see that some of the funds are nicely structured for the angel and the Series A, Series 2, and then growth fund, right? But at the same time, like say that lots of startups, which in the normal time have lots of model got restricted. I'll come there. Like you said that hospitality, almost all the models are not even for the consideration. Travel, not for the consideration. So these are the big sector I'm talking about. Education tech definitely is thriving. E-commerce is also thriving. Health tech is also, fintech is also thriving. So the related, the proxy with those sector where you are lying, where your startups are playing big role. Because then you start parking, hey, I will see that after, let's say, after 3 quarter, after 4 quarter, because let's say hospitality is not something I'm up for evaluating. Though might be, if you start driving the TAM and all, we have seen the valuation of the companies, how big the valuation has happened in the hospitality industry. But currently, anybody who come enter into that, I think first day is the last day. That's how the discussion, and people will going to say that, are you out of your mind? Why you wanted to start something like this? But this and also you see that there are lots of natural founder who comes for those sectors, even though you're not able to support. So I think now you are selective, but I'm in disagreement. You have like we cannot contradict. There are lots of money available. People believe in digital economy. People are putting all sort of money for long term, short term, for everything for the digital. But at the same time, also we have to see that in which sector, and that's where I'm not totally in agreement. Don't go by those numbers. Might be those 70% are falling into one sector only.
Interesting point. Ashmir, have end goals changed for startup founders? I mean, is it still goal IPO, or is that not the goal anymore? It's not necessary to feel a sense of validation only via entering, the primary market and seeing yourself as a listed entity.
Yeah, no, I think like for me personally, the goal is saying, are you in business in 20 years from now, right? As private, public, what equity holding you do, it all those things will evolve, right? It's a function of capital markets out there. Very frankly, मतलब मेरे को तो ऐसा कोई excitement नहीं होता कि if I get listed, I will feel a sense of achievement, right? For me, it is about giving an exit to people who have invested in you, right? And it's just one of the mechanisms to give them an exit, right? Does it necessarily change anything for the company? No, not true in all cases, right? Some cases, some businesses going public adds value. Some cases it won't. So I think the real thing is, are you relevant 20 years from down the line, and have you created an institution, or it's still a founder driven organization, because अब जिद पे तो कितना ही धंधा बना लोगे, right? Like you have to have people really buy into the economics of what is being done, and so therefore creating an institution is, to me, and I'm sure like all of the other folks would agree, is the bigger goal. Public private तो होता रहेगा.
Mhm. What's happening with some of the traditional problems, like hiring enough talent, etc.? Has that gotten resolved now, Ashneer? Is the talent pool much wider for the startup community, or are you still hustling to get it done all yourself?
No, yeah, it's becoming tougher, right? Like, see, inflation hold नहीं करता है, inflation flow through करता है, बिल्कुल. It's like through gravity, right? तो आपको लगता है कि अरे मेरी valuation बढ़ गई, मैंने $300 million उठा लिए, but then when you go and start building the business, when you have to go for the talent, and because you have now taken a valuation much ahead of time, you also don't have time. So you will end up getting through your nose for talent. So I keep telling people, don't get fooled by the 130 crore people in India, right? जब काम करने पे आएगा, you are as small as Australia, and it's true.
Sumit, you want to come in on that because yours is an even more sort of niche area. Are you struggling with talent, or do you think there's lots there, or is it just too expensive to pay for so much talent?
Definitely, it's getting tougher. There's a limited talent pool available, and startups having tons of capital. They just and I, I don't come from that mindset, but I've seen startups paying money, throwing money to get talent, right? And I was talking to, so we have a small team. So earlier, I think before pandemic, we were like 35 odd people. Now we are like almost 120 plus because the business is growing, right? But when we talk to some people or some agencies, they're like, we don't have people available. We are running a negative capacity, right? So that's where the situation is. Good people, smart, talented people are not there. I think this is also because of the change, right? A lot of people are now very open. They don't want to work with companies where you have to necessarily go to office. Everyone is having more flexibility. Okay, मेरे को तो काम करना है, remotely. I just want to work from mountains, or I just want to work from beach, and I don't, I don't want to go to that sort of a culture where I have to go to necessarily. So this gives, I think, because of this, because there's very heavy demand for quality people, and they're willing to throw money, and then people are also having this mindset where they just want to work at their own pace. This is going to drive certain changes. That is, companies might be forced, or might might adopt a hybrid structure where, I think this is something that we are also doing, where if you want to work, of course, after the pandemic ends, if you want to work from office, just work from there. If you want to work from home, do whatever you want. We just want to get things done, right? And this will also, and one of the change that I've noticed is a lot of these international companies or foreign companies, they have started acquiring talent from India and paying very high, salary, simply because now it doesn't matter. Now it doesn't matter whether you're from India or from Australia, doesn't really matter. So there was already very little supply available, right, for good talent. Now, I mean, those international companies have taken most of that because they are paying high, right? And this is also one important factor for quality talent. So I think, yes, we are facing a lot of challenges, but I think, right now we have plans to increase the team size as well. Good thing for us is because we are working in a different sector, a niche sector, and a lot of people are really passionate about it. So what we have seen, I think that's one of the filter that we have, right? When we interview people, we just talk about the salary, but all of that is secondary. but we just want to see whether you're passionate about it, because aaj mil raha hai, kal ko, it's just a temporary phase we are living in, right? So I mean, right now there's so much capital available. Tomorrow it might not be. So it's very important that you have people who are really passionate about this space. And for us, it's even more important because tomorrow if government just comes up with the news, and then we don't want people to leave the job, right? So we just need to be very, very sure that if you're coming in for the right thing. You're not just coming in for the salary. Of course, we do pay good salaries, right? And it's just that we don't keep that as a criteria. I think yes, it is challenging for us to hire, but also it is helping us a lot, because now I have really seen like very top people, very quality people. They are willing to cut down on their salary just because they want to be part of this industry. They really believe that crypto is going to be the future. They really believe that India is going to regulate it, even though there's no regulation. But they're willing to take that extra risk and willing to be a part of our company. I think that is something which gives us a lot of satisfaction, and it is challenging, but it's a good problem to solve. I would say that.
Okay, so for anyone who's listening and looking to apply, guys, there's lots of potential, as you can see here, lots of learning. Just be reasonable about your salary expectations. This is a startup community. We've got about 10 minutes left for our conversation, and I want you to indulge me in being a little idealistic at this point. At one level, it's almost bipolar what's happening with India at this point. You have a stock market that's pretty much moving in one direction. You've got fund flows pretty much moving in one direction. And then you have this very, very real humanitarian crisis that the country is living through. Is it time for startups? Is it time for the money that goes into startups to start thinking more carefully about societal obligations or about giving back for good in a more meaningful way? I mean, Vinod Khosla's tweet set off a conversation where he said, I'm willing to, go out and fund and help hospitals that need infrastructure. But do you think we need to really dig down and start thinking more seriously about this? I want all your thoughts. So let me start perhaps with Yogesh, and then I'll move around the table.
Well, to be honest, I was hoping that I would be the last one to be taking this on. Frankly, it's very easy to say that sustainability is the way to go, but the pressures that a genuine startup entrepreneur who's just gone out of college or maybe closed down one shop and moved to another new shop, for them to really think and invest in sustainability is very hard. That being said, I think the debate needs to move on from whether or not sustainability is required. I think we need to accept that sustainable, inclusive growth is the only way forward, period. And once we've said that, then the question is, shouldn't investors, shouldn't the overall system also give more respect and more points towards sustainable growth sort of avenues? And I sort of, I'm very interested in hearing actually from the co-panelists on whether they think that, if they were to rewind their lives and be back to 23 and starting off, will they actually be saying that, when you were raising the first few lakh rupees from friends and family or angels, would you actually be feel confident that you tell them that, by the way, also I'll be spending 20% more because I'm doing this and this will be very good for the environment? So at some point, when do the realistic expectations need to be realistic? But like I said, there is no other way that exists anymore. That is also clear. Where does that exact balance lie? I think it's beyond my paycheck, at least at this point. But I do see investors giving a lot of points. Unfortunately, the biggest problem that is there is when you do your financial modeling, there is no entry for sustainable practices. There is no entry for good quality, diverse board and management structures. There are no points for it, right? That's probably going to change. Maybe the way to do this is that at the end it runs through an ESG team, and they are not just flag posts, but they are actually dictating what kind of investments made. So that may be the way forward. But I think that we are going to see a lot of evolution on this space. We are far, far from where we can be and where we should be.
Sujit, you want to come in on that?
So let me reiterate your question. So you are saying that in this tough time and pandemic time, how the startups should help so that situation or should improve, or wherever it more required, one should focus. And in a various way, definitely one is financial. But I think that the least of my concern, the biggest concerns are innovations. Uh, so as a startup, like if you'll see a startup is like synonyms of innovations, like how you are solving the problem through better way or technology or process, and you are applying those application and removing those inefficiencies. I think startup has a big role to play, and if you see, there are various initiative has happened. So I don't know if you know, there's the Act Fund has been established. There are lots of entrepreneur startup who got their some exit. VC industry has participated. There are version 1, version 2 has been again launched, and they have funded almost like, I don't know the exact number, but 50, 60 companies who are doing a great job in this pandemic time. And those entrepreneurs are getting support out of those initiatives, and they are definitely bringing lots of impact. Simple thing, let's say in today's in India, if oxygen production is not the problem, their distribution is problem. Assets tracking is the problem. Where how which assets should be deployed where, how the routing and utilization of those assets should improve. And I see these are the great application of the technologies, and the startup can play a big role to organize the government or state government, local authority. And I see the intent. Point is the chaos is so big.
Sorry,
And
please.
it has built up over time, built up over let's say very sharp. So it's very hard to find that balance. Hey, where to go? So currently the chaos is going on, but I see there are lots of initiative in some of the pockets are happening. Government is reaching out to the startup ecosystem for help, though they have their own difficulties. I'm not saying that everything is solved. The data problem, how the capacity to map, where the what are those critical facilities, criticality of let's say patient, where they should go, all those things. And I see things will improve, and the startups are playing a big role. Definitely lots of people like founders who has contributed from money, but more importantly from their bandwidth, and personally they are devoting a lot. I know in Bangalore ecosystem, almost all of us are involved directly, indirectly with various initiative by government, by own community to solve the problem, and not only just a hospital oxygen, right? How to smoothen the delivery for the essentials, how to smoothen the let's say transportation, things like that. So I'm seeing lots of it, but it's just a start. I think something we have to carve out a special niche, give more incentive in a startup. Let's say how to let's say when government is thinking about the startup ecosystem, they should also think from the impact point of view. Some of the fund or some of the initiative which create impact in society, and I think those should be somehow should be incentivized better. I think that's definitely are the gaps, and I'm very sure government will do it.
Yeah, no, and I'm glad to hear that Bangalore is doing so much. You guys are the nodal point of the central nervous system of the startup universe. So what you do today, hopefully the rest of the country will do tomorrow. Ashneer, come in on that. I saw you nodding to a lot of what you heard. Where do you think the best fit is for startups?
Yeah, I have a very different view on this. मेरे को लगता है इंडिया में ना इंसान को अपना काम छोड़ के सब कुछ करना पड़ता है, राइट? सो यूएस में क्या है कि गवर्नमेंट है, वो गवर्नमेंट का काम करती है, बिजनेस बिजनेस का काम करता है, फिलांथ्रोपिस्ट का काम करता है. हिंदुस्तान में गवर्नमेंट बिजनेस करती है, बिजनेस फिलांथ्रोपी कर रहा है और फिलांथ्रोपी बिजनेस कर रहा है. दैट इज अ फैक्ट, राइट? मतलब ग्राउंड की सिचुएशन यही है. तो आई एम तो अ बिट डिसिल्यूशन्ड विद स्कीम ऑफ थिंग्स. वो मेरे को कोई चैरिटी नहीं करनी है, मैं जनरली बता रहा हूँ. मैं धंधे वाला बंदा हूँ, मेरे को धंधा करना है, राइट? एंड दैट इज द बेस्ट आउटकम फॉर द सोसाइटी, बिकॉज माइक्रो इकोनॉमिक्स में पढ़ाते हैं ना कि अगर आप दोनों काम दूसरे बंदे से बेटर कर सकते हो, तब भी आपको वही काम करना चाहिए जो आप अपने दो कामों में से बेटर कर सकते हो, राइट? मेरे को कोई फिलैंथ्रोपी नहीं करनी, कुछ नहीं करनी। जब तक मैं धंधा चला, मेरे को धंधा चलाना है। And if I do run it well, I've done my job, right? I have zero guilt. जिसको लगता है कि ब्राउनी पॉइंट बनेंगे फिलैंथ्रोपी करके कर लो, मेरे को नहीं करनी है। जब फिलैंथ्रोपी करूंगा फिर धंधा नहीं करूंगा, और जब गवर्नमेंट चलाऊंगा तो दोनों में तो कुछ नहीं करूंगा। तो अभी तो धंधे पे हैं, बट जिस तरह हालात चल रहे हैं, हम सरकार चलाने पे आना पड़ेगा बहुत जल्दी।
But are you equating philanthropy with community support?
कम्युनिटी सपोर्ट तो सी, एंड ऑफ द डे यार, आप मेरे को एक बात बता दो ना, लाइक डू यू लाइक द सिचुएशन वी आर इन, राइट? तो अगर हम एक कम्युनिटी सपोर्ट तो करना पड़ रहा है ना, मजबूरी है, राइट? मेरे को कोई अंदर से तो मेरे को ये आता है ना कि यार धंधा में फोड़ना है, मैं 100% ग्रोथ आनी चाहिए अगले साल, राइट? मेरे को रात को सपने सुनना आता है कि यार कल के दिन में 20 कॉन्सेंट्रेटर पहुंचा दूं कहीं पे, वो करना पड़ रहा है, राइट? मजबूरी है। दैट इज नॉट माई मोटिवेशन इन लाइफ। मेरे को क्यों चाहिए यार, कॉन्सेंट्रेट की जरूरत ही ना पड़े ना किसी को। दैट इज माई मोटिवेशन इन लाइफ।
Yeah. No, fair point. I take that. Sumit, which side of this coin are you on?
I would say that, right now we are definitely in a very difficult phase, and startups, Mittal, you mentioned correctly, startups have a role to play in this, right? Of course, everyone has their own limitations, but startups, I think, needs to come out, and they are already doing a pretty good job there. I just have, I think the opportunity, and I feel that entrepreneurs are basically problem solvers, right? And you have got these problems, right? You have a lot of this capital, and this is the situation where we are, and it's practical, right? Doesn't necessarily mean that you have to do a very operations or a food delivery business in this time. How about doing a startup where the world needs your help, and there is, if you are doing something which is solving, and you can, of course, I mean, you can, I can take a hybrid approach where you can make a business out of it, but at least this business or whatever you are doing is essentially also helping the nation. There is capital available, there is entrepreneurs available who are currently either jobless, and the world and the India is in a problem, right? So if you can combine these three things, right, where entrepreneurs solving the right problems in the right market where there's a lot of capital available, I think we'll not have problems, and we'll not complain about because of COVID situations have businesses are shutting down. I think we would see where these problems which the current country is currently facing, and there's tons of capital out there, investors out there who are willing to help them out. We have seen that already. So I think we should see this as an area of opportunity where entrepreneurs are coming up and solving problems, whether it is problems of supply chain, or building an app, or doing something where it helps the nation, and also they can indirectly create a business out of it. And it's not something, we know that the world is moving to a digital economy, right? And I think whatever they are doing right now is not going to be just there for this phase. I think the core problems they are solving is going to be there, right? And I think this is a good opportunity that people or entrepreneurs should look at and try to tap onto that, so that they are able to give back to the society as well as create a good business. I'll take a hybrid approach here.
Okay, so we have an optimist, we have a realist, and we have a diplomat. We also have a lawyer, of course. Gentlemen, thank you very much. Cracker of a conversation. I hope to see you in better times. I hope Dhanda carries on well. And I hope we talk about things which are far less depressing than we do at this point. My thanks to all my guests for joining in today.
Thank you, guys.
Thank you.
Thank you. Thank you.
That's the first one, and I think that's really set the tone for the rest of the evening. You heard so much about the reality of the startup universe and what they're going through. Of course, much of this is to do with several newer spaces and newer industries, as you heard, what's happening in healthcare tech, what's happening generally in the digital technology. But what about some of the businesses that are looking at the ESG side of things and have also been long-standing businesses themselves? What's coming up next is an extremely interesting conversation, lessons from the boardroom about the pandemic and how best to navigate these kind of challenges. We are going to have very shortly joining us Ram Charan, Independent Director at Renew Power, and Suman Sinha, who's of course CMD at Renew Power, has long been a face associated with solar energy and with solar technology. They will be in conversation with Sudeep Khanna. That's coming up in just a little bit.
Request all the Am I clear to both of you, Ram, Sumant?
Yeah, yeah.
Okay, great.
Just wondering which is a better location.
Okay. All right. Hello, Ram. Hello, Sumant. Welcome to this session. I know outside things are not particularly encouraging at this point of time, but like they say, the business of business has to go on. And it's wonderful to have two such eminent panelists for this session. Very short introductions because I'm quite sure that both of you are well known enough to most of the people who are queued in today. Ram Sharan, one of the best known management gurus in the world, author, also an advisor on strategy to lots of companies like Toshiba in India, the Aditya Birla Group, of course, Renew Power itself. Ram has also been a prolific writer. He's written several books on strategy, and his book, How Inventors and Boardrooms Are Redefining Talent, Strategy, Risk, is out in July this year, Ram, around that time. And Sumant Sinha, Sumant and Renew Power, the company that he set up 10 years ago, are synonymous with the rise of the renewable energy movement in India. Sumant was an investment banker at some point of time before the entrepreneurial bug bit him. And at this point of time, I guess he's on the verge of hitting a key milestone for any startup, which is to take his company public. Sumant, Ram, welcome to the session. I know that the formals that the session is supposed to be about boardroom lessons from the pandemic, but I thought we could start today with just a personal question to both of you. During the course of this pandemic, Ram, if I could start with you, have there been any learnings that have reshaped your own thinking with respect to business, with respect to your life, and would you like to share those with us? Ram, we can't hear you.
Can you hear me now?
Yeah, you're fine.
Thank you. My observation largely on the American scene, and that is the first and foremost things, is to really care for the employees. That is number one. It's a very clear, magnificent thing to see that how critical that is. Safety, care, all those things. That comes above the financial side. Number two, it's now well established very clearly that you can cut the cycle time in most decisions. The example is the vaccines. Moderna made the decision in 2 days. They had the digitization early. They ran things in the parallel, and you have a vaccine in less than a year. Normally, it used to take 8 years. And people sharing the basic research, basic data going forward. And number three, the boards that I've been looking at in America, very first thing is to help the CEO, but keep out of the way. CEOs enough things to do in the pandemic, and they have the view if there's a cash problem, then there may be some advice to where the costs have to be cut, capital expenditure has to be cut. But the most important part is the clarity with which you're going to go through. Because at the time of the beginning of the pandemic, nobody knew how long will it last, what will be the depth, did not know what will happen to the depth of the economy. So this uncertainty is more supportive than doing the normal ritual board work in many of these situations that were caught in the cash mind.
Right, right. Sumant, from your experience as an entrepreneur over the last 10 years, what kind of what kind of advice have you got from your board? What role has the board played in your growth and in the growth of your company?
Yeah, just to echo what Ram said about the first question that you asked, I think employee safety and employee health is something that has come through, very, very strongly in this whole crisis. And it's not just the physical well-being, but also the mental well-being. Because if people are not able to focus on their jobs, if they are having to look after their loved ones and near and dear ones, then this is the time for the company to stand behind them or stand with them. And I think that is really what, in the long term, they will value much more than anything else. And you also have to be sympathetic because a lot of people are not able to focus on business as much as obviously is possible in this time period because they have other priorities. And so therefore looking after employees, both mentally and physically, and their families, because this is a time when you have to extend beyond just the employee, but look at the employees, immediate surroundings and family members as well. And that is something that has come through very strongly. And the second thing I would say has been the issue of resilience, because over this time period, obviously it's been going on now for over a year, and in the first 3-4 months it was very intense, and things became a little bit more relaxed, and then again it's become really really bad. And so therefore you have to just find reservoirs of strength and mental fortitude as a company and as a unit and as a group of people that allows you to carry on. So I think that is something that is that at least I have found is very critical. Having that resilience and that fortitude to carry on, not just for yourself but for your employees and for your company, I think has been very critical. To answer your question about the board, I think, especially in our case, and the board has been very supportive. They obviously recognize all the issues that we are dealing with and grappling with. So if there are any delays on account of COVID on business execution issues that we might have committed at some point in time, the board has obviously recognized that, those have to be revisited. Secondly, we've also told the board that, look, in this time period, we can't look at a full year budget. You have to do budgets much more flexibly and, keep revising and revisiting what you want to target in the next 3 months. So that is something that the board also was flexible about. And the third thing I would say is that right at the beginning of the crisis, we decided to allocate a reasonable sum of money as our contribution towards dealing with COVID across the country. And I must tell you that when we took the proposal to the board was absolutely supportive, and they said, yes, we must absolutely do this. So I think it's also helped us be a good corporate citizen, especially in this time of need. And so I think the board has therefore been very supportive for all of our issues so far.
Ram, in that context, I mean, is this, in a period of crisis like this, as Suman said, you set aside a certain amount for allocate for people, for your people, as well as for society in general. Is this purely a matter of what's called corporate social responsibility, or is there a longer term payoff from such decisions that you take? Because there is a lot of stress on companies at this point of time to take these decisions. Ram, you're not audible.
Am I coming out now clearly?
Absolutely, absolutely.
Yeah. I'm a product of India, very heavily culturated at the age of 10, 11, 12. Linking with the society has been a part of us. We were always trained, you give 10% of your income to the people and the community. I see the Indian CEOs in America who are picking up this ball and saying, we have a license from society. We must work for society. And this is the part, a long-term thing. It's not something, a daily stuff, and you have a initiative of the day. So it is a part we must do. Yes, we had people came in earlier in the 70s, announced all those things. When I was teaching at Harvard, we had a course in my compulsory course, required course. We did sessions on social responsibility. I believe they still do that. And so we cannot ignore that. Argument here is we do actively, not the word ignoring. So Sumant will tell us more. We have a very active thing being done in the renew in the whole social responsibility. It has seemed the board is actively knows about it. Allocation of funds, evaluation of what is being done. It's very serious. And so I will have someone tell us more, because Mrs. Sinha does that for our company in Renew.
Suman, do you want to take it from there?
Yeah, sure. So Sandeep, we are doing what we are doing not because it's a good thing for the business. We are doing it because it's the right thing to do. And there is no, you can't look at anything beyond that. At a time of need, and at a time of distress, if you don't stand with your employees, then who will? If you don't give them all the possible help that you're able to give them, then who will, right? And what the long-term benefits are and so on, frankly, it's not something that we're thinking about. This is a time of need, and therefore we are in fact helping them. And so that's the way we think about it, right? Ram alluded to the fact that we spend, we do a lot of work on the CSR front. And again, it's the right thing to do. It's not because the government has mandated something, therefore we are doing it.
Right.
This really demonstrates the heart and soul of the company. And our heart and soul tells us that we have to do the right things and the proper things, not just for our employees in the time of need as right now, but also for the country as a whole. And as you know, our business itself has a very strong social purpose to it, right?
Absolutely.
And so therefore, it's good that we're doing that. But beyond that, we've never bothered about whatever the government mandates us to do. We've always done whatever we've thought made sense for the communities and the societies where we operate, where all of our plants are located. And we operate in almost 110 sites in very rural parts of India, where development is not really that great. And so, if you can provide schools to children, if you can provide self-help groups for women, if you can dig wells and provide safe drinking water, if you can, provide all kinds of other facilities, then that's really, again, it's the right thing to do because we are in a position to do it. And that's really what we do. And therefore, Vaishali, my wife, is the one who oversees our sustainability efforts as well as our CSR efforts. We take that very seriously as a company.
Sumant, on that, so you have a high-powered board. You have representatives from your investors as well. How important is it to have the backing of the board in when you do things like this? Do you face questions saying, why are we doing this? Why are we spending money on an activity like this?
Yeah. No, never. We never face any questions on these issues, and that's something that I'm, thankful to the board for, because none of them has ever brought up any issues. If anything, there is a lot of interest from the board side to understand what we're doing, to get more involved, to learn more about it, and to see how they could contribute. And so, even the number of our investors separately, in any case, pursue their own agendas as well. So, in a number of cases, we are able to link up with them and work together with them. But our board has always been very supportive, and therefore it has always been very helpful for us. And I must say that we've therefore always spent much more than we've been required to do.
Ram, just going beyond the role that companies play in society, but in terms of sheer business, at a point like this, when there is a crisis around you, business itself is going through a lot of turmoil. What specifically can the board do to assist the CEO?
Yeah, I think the first part, as I mentioned earlier, don't use and consume CEO's time beyond the bare essential, because he's got a lot or she's got a lot of things to do. Number two is, in the financial condition, many got caught in the liquidity issue.
Right.
Now there, the sounding board is very important. How we help, not help, which way. Number three is there are some tough decisions have to be made when you have liquidity issue. The board support is very important. Is what to cut, not to cut, etc. And then as this thing begins to move, the uncertainty comes in. Issue becomes the discretion to be given, and you don't have all the time about, as someone said earlier, that you have a fixed budget for the year. We don't even know which way the debt is going. So the agility is the flexibility, have confidence in the top management and so on. And I think sometimes some of the board members actually taken the time to inspire people on the Zoom and so on. So there we are totally with the management. No issues of any cracks whatsoever. Because sometimes people can raise fake news and so on. That's the key point, that you have a steady hand, help and support going forward. And then if there are business issues, then you deal with them.
So Ram, this is not a time for a board to, raise issues which are a little more long-term, let's say. This is the time you're saying for the board to support the business leader, the CEO.
Yeah, I think, Sandeep, there were companies where you are financially okay. So there I am on the board, and they're saying this is an opportunity of a lifetime on the business side of it. Many of them were hurting, so they did not have a connection to the customer, digital connection to the customer. So I got a call from a chairman of a company, non-American, big company, and say, my inventories and my flow of goods is stuck. Can you help? He called me directly. And within 9 weeks, we fixed it. I got a vendor to put it, connected it, got a digital connection, last mile delivery. So there you have those things. It's not general. You have different companies have different issues. But while it is difficult for many, it's also a lifetime opportunity to think, when you come out of it, can you have an exponential growth?
Right, right. Yeah, that's fascinating. Samant, can I put the same question to you a little differently? Through this last 14, 15 months of this crisis, what's been the single biggest preoccupation for you as someone who's leading the company? And in that, in trying to resolve that, what is the kind of support you've looked for from your board?
Well, Sandeep, priorities have kept shifting over the last several months, and the reason is because the situation has continued to evolve, right? So in the beginning, when we were faced with the lockdown, at that point we didn't know which way this whole thing would go, how deep the lockdown would be, what would happen to power demand, for example, what would happen to payments from the distribution utilities, how the government would respond to it, whether we'd be able to get our people on sites, how we would take care of our people. So in the beginning, it was really much more existential. How will this crisis impact us? How will it impact our cash flows? Do we have sufficient amounts in the tank or in the bank to really take care of any issues that might arise? So in the beginning, frankly, for the first couple of months, well-being of employees and just the financial sustainability of the company to be looked at from all types of stressed situations is what we were really focused on. As we progressed through that, we realized that, look, things are not as bad. Things were turning out, at least from a business standpoint, reasonably okay. And yes, a few of our people came down with COVID, but it was a relatively small number. And so we found that it gave us an opportunity to actually move a little bit to the front foot from a business standpoint. And so we had to have that, as Ram said, the agility to switch from being defensive to becoming a little bit more on the front foot and start looking at business opportunities again, once we made sure that our business and our people were safe. So we actually went to the front foot and we started actually winning a lot of auctions at that point in time. And then again, things started stabilizing. So we said, okay, now it's business as usual, started looking forward. And as you know, we got the SPAC deal done, which we announced the merger of a couple of months ago. And then the last 2 months have been a tremendous setback because obviously, as we all know, we know the situation that's been happening. And now more and more, our employees' safety has become uppermost for us as well. And again, we are looking at, okay, how long will this carry on for? How do we need to look at our commissioning deadlines and schedules? And now it's a little bit more complicated because we have commitments out to global investors about what we are going to be doing. And so we have to now start looking at how that might be impacted or not, depending on how long COVID plays out. So, it becomes a little bit more complicated. So I think in this whole thing, as I said earlier, our board has been very supportive. They've been very understanding of all of these issues. And from our side, we've been in very close communication and contact with them. And I think the wise counsel and advice of people like Ram has really, really benefited us. For example, Ram was here in the month of March and he spent 3-4 days with us. So, it is really good to have that kind of input, to get somebody that you could actually, discuss a lot of issues with and who could give you a very different perspective. So it's those kinds of interactions and keeping in touch with the board, keeping them apprised. I think that has really been very helpful.
Right, right. And Ram, is that been the experience with all of the other companies that you advise across the world, or is it country specific, where a country is already coming out of somewhere out of this pandemic phase? They have different priorities, whereas a country like India right now, we are behind on the curve, so the companies here have different priorities.
Yeah. So first about India. I want everyone to know we will overcome this. We're going to come out ahead. This is something we did not impose on ourselves.
Right.
We've got to have resilience, courage, and optimism. It's going to happen. Instead of commiserating at the cocktail party. We should be thinking about how to encourage people, how to convert that conversation that it will be done. People are resourceful. We have seen in many, many ways, lots of floods, lots of difficulties. One time in Mumbai, how everybody came and pulled the whole thing together. So that's the first part. The second part, then, in different countries, in different industries, in different companies, they're at a different stage of what's happening. Therefore, the key point of every leader is to do two things simultaneously. One is to deal with the present with courage, with hope, but feet on the ground. And the second thing, look outside, look what's coming, what the trends are. Building the future is the job of a leader. Confronting the reality of today and getting people to get courage is also a part of leadership.
Right. I think that's really wise counsel, and it's also extremely encouraging to hear a global guru like you saying these things. I think everybody who listens to this should pay heed. Sumant, I'll just come back to you for a kind of a continuation of the point that you made. So in a sense, these 14 months, I mean, they probably compressed a lot of features in terms of business. Like you said, and priorities keep changing, the issues keep changing. Just when you thought that you're out of this, again it strikes back. What's the learning for an entrepreneur, maybe who's starting off just or has just started over the last couple of years? There would be despondency saying that, what's the point? I've got in at the wrong time and I'll probably need to get out. What would you advise an entrepreneur, a younger entrepreneur, to be doing?
Well, first of all, keep wise people like Ram Charan close to you. And that's point number one, because the kind of input that you can get and that we just heard from him right now, I think it's those kinds of pieces of wisdom and advice that actually keeps you going. It gives you a sense of perspective. It gives you a sense of not getting carried away by the here and now, and the fact that you have to keep your eyes glued to the future as well while dealing with the here and now. So look, I would say that is really my advice to entrepreneurs as well. So first thing I would say is always plan for the worst. And the worst can always be worse than you can actually expect it to be. And so never ever extend yourself financially beyond the point. That I think is very important. For an entrepreneur, he or she is already taking a lot of business risk. There's a lot of operating risk. Please don't layer onto that a lot of financial risk. Do not take debt. Do not take do not put yourself in positions where you have to get that extra equity, otherwise your business will go under, right? Don't put yourself in those kinds of positions. Now, for an entrepreneur, it's very tempting to raise equity at the latest point so that you can get a higher valuation and dilute yourself less. But it's better to build a sustainable business than to really focus too much on dilution issues. If you build a really good business in the future, 10% of 100 rupees is almost better than having 100% of much less, right? So you have to look at it from that standpoint, and really, therefore, build the business in the long run. Don't take too much financial risk, so that when times like this come, you have the ability of focusing on business issues and your people issues rather than wondering whether your company is going to fundamentally survive or not. And get really good investors to come with you. Associate yourself with good quality people around you. Get advisors like Ram and so on, who can actually give you that sense of perspective. So I think it's very important to do these really organization building and organization sustainability type of management issues, which most entrepreneurs tend to not focus on that much because they're so day-to-day in their work and their business and their products and their opportunities that they don't focus on these kinds of issues. But I think this is really what times like these teach us, that you have to think about the future much more sustainably than normally.
Ram, you've served on the boards of lots of companies. You've been an advisor to so many companies. Would you say that increasingly ESG issues, issues related to the environment, to corporate governance, and to society, are they coming up more than they ever did before? And what do you advise companies on those issues?
Yeah. Sandeep, the acceleration has taken place. More technology is coming. More startups are coming to deal with those issues. It's first the mindset of the top management and the board. It's real. It's not negotiable. And on the boards I'm helping or on them, I'm saying we now know, not a matter of guessing, that we will show return on investment solving the ESG problems. We have it in spades. It's not an appendix. It's not something you take emotional tones. We have to do it. No, we must do it. Let's get the clarity or juices of new technologies and how to do that. The most difficult part of it is not resource allocation. It is changing the habits. You go inside, people have to redo, rethink, rechange habits in the operations and so on. So this has begun. Companies are coming, allocation being done, the funds are flowing differently to encourage that. And you have seen the announcements. We will do this by 225, 230, 240. Now I have companies where the boards have actual linkage of the CEO compensation to the goals and to the activities on the top management part and reviewing it and linked with compensation. And we're designing that. So it's a positive movement. It's a change of mindset. And it is real. As I said earlier, it's not we have to do it, we must do it.
We've come to the close of this session, and there isn't a better way to close it than with those wonderful words from Ram. We have to do it, and I think that's really the message from this session. Ram, Suman, thank you very much for an absolutely informative and wonderful talk. And yeah, with that, Mitali, I'll hand it over to you.
Thank you. Yes, Sundeep, thank you for ably steering that conversation. Thank you, Mr. Charan, and thank you, Sumant. Of course, there's been so much great work that has been done by Renew Power in the area of ESG as well. That was a boardroom conversation, but with a little bit of an entrepreneurial touch. The first conversation was all about the startup universe, and now we're going to be talking about the folks that are powering the startups. What's happening with all the venture capital folks? How are they feeling about the economic environment, and how are they feeling about prospects from here? Before I introduce all our guests today, here's another interesting factoid about what's been going down in the venture capital space. So that's just a snapshot of what's happening with venture capitals. Full house this evening for this conversation. Let me introduce all the faces that will be joining in to lend their weight to this chat. Karthik Reddy, co-founder at Bloom Ventures. Sumer Janeja, who's partner and head of India at SoftBank Investment Advisors. Rajan Anandan, managing director at Secure Capital. Ankit Agarwal, who's partner at Oteria Capital. Lavanya Ashok, partner at Trifecta Capital. And Kasturi Ghosh, who's partner at TriLegal. Welcome back. As promised, this is the venture capital side of the conversation. Earlier this evening, you heard what the startups were doing and how they were feeling about the funding universe. But let's ask these folks themselves how they're feeling about the landscape. Of course, I must add to all our conversations as I have been, this is an extremely difficult time for people personally, for organizations, and of course for communities at large. So we empathize with that, and for anyone who's joined in and is facing that, you have all our support and our thoughts as well. Thank you for joining in. I thought I might open the conversation with some opening comments from all of you, just to set the tone of what the landscape looks like, and then we take it from there. Karthik, perhaps I could start with you, just in terms of the basic question of whether good deals have been affected by COVID for the VC universe, and how you're feeling, at this point in time.
Thanks, Mithali, for having us.
Perhaps I can start with you.
Yeah. Can you hear me well?
Yeah. Yes, loud and clear.
Thanks, Mithali, for having us. It's a difficult time indeed, but if you put in context of the last 15 months, it's been a relatively new universe where we've had to operate under these constraints continuously, right? It was not like the last month has thrown a very different light at it. And I think most of the ecosystem, whether it was founders or whether it was VCs, had adjusted to this new way of living. And in that sense, I think we count our blessings that most of us can actually function sitting out of our rooms, our living rooms, and in our homes, as opposed to a lot of people who have to be out there on the field. But the beauty of the resilience of, I think, in general, startups and the way we think through business processes has been that you work around these constraints very quickly, and that's the strength of these organizations, I guess. And that had thankfully been in place over the last 12 months. That said, you can't take away from the day-to-day shocks, but that apart, I think the CEOs realize that they have to build despite those constraints. So what we are seeing even through these last 4 weeks is you're seeing incredible resilience, and people see a sense of purpose in what they're trying to build out. And that is being reflected also in numbers, right? Unless your business has been totally shut down for logistical reasons. We continue to see numbers strengthening, the digitization wave that started last year continuing, and incredible shift in consumer behavior in terms of how they actually are digitizing themselves, each one of us at an individual level. The number of click-throughs we got to make this a smooth talk today is indicative of that. And I think investors recognize that potential, and our benchmarks have never been India alone, right? It's India in the context of the global market. And as you can see, the US is coming back, the UK is coming back. And so they know that this is a temporary setback. And we're not necessarily going to see this as if anything, it's a permanent shift in the right direction for technology-led businesses. So we can clearly see investor enthusiasm around that. Our good friend Sumer is obviously leading the charge at the late stage. We are trying to do our bit at the early stage.
Lavanya, let me turn to you because up until now, it really has been a good run in terms of fund flows, in terms of interest, in terms of deals closed. Are you feeling like you have that much sort of outlook and highway going into the next few months of 2021 as well? You need to unmute yourself, please.
Sorry, most famous words of 2020 and 2021. Echo a lot of what Karthik felt in terms of the resilience of the ecosystem, and just a couple of thoughts on really what Indian business has had to endure in the last 5 years, right? Pick your externality. We started with GST, demonetization, credit crisis, pandemic, China war. I mean, these are unmodelable on Excel. So these businesses have lived through the toughest of times. They've been through the valley of death. And I think have shown so much optimism in the past 1 year in the toughest of times, and also taken tough decisions. So as we think about both on a micro level for India tech and a macro level tech globally, I think we're seeing markets speaking very resoundingly in favor of the future prospects of this ecosystem. And so I'm personally, a big believer in the continued growth of the digital economy in the country. And from a trifecta perspective, we are also planting a flag on the late stage side, trying to play a role in the late stage equity ecosystem as companies mature and start to seek liquidity outcomes for that last leg of the journey, either to being a listed entity or consolidated larger business.
Mm. Ankit, how are you feeling about, I guess, not just how things are ahead, but as Lavanya pointed out, the road over the last couple of years has looked like?
I think everybody talks about the very fast-paced digital adoption in last 1 year or so. But I think all of us are very lucky that the India was very prepared for this fast-paced digital adoption. If you go back in last 4 to 5 years of just the penetration of internet, penetration of smartphone, in which I think the innovation economy has played a very important role. I think there was a resilience there was a framework of resilience built already, for which all of us were able to kind of quickly, or at least most of us were able to kind of quickly adopt to it, and were able to kind of engage, consume, do commerce transactions sitting at home. So I think we feel very lucky that we were already kind of well prepared, largely because of the internet and mobile penetration. I think definitely this has given, while this is of course all very unfortunate where we are in terms of global pandemic, but definitely it's given a very strong push start to the innovation ecosystem, and definitely it's pushed technology to the center of most business models. And whether it is the new age economy businesses or even the old school businesses, everybody has realized that technology does become very important enabler as well as important core to how they operate going forward. I think uh, a lot of investors, early stage investors like Bloom or many one of us used to take 7 to 8 years call of like in 2012, 2013 that internet online businesses will become the reality. Right? I think that's all kind of proving out to be true. Where most of the large startups that we see today, right? Those are not startups which just started 2 or 3 years back. Those startups started like 5 years, 8 years back, and that's what we are reaping the benefits. At least that we are in a better place where we can engage, do commerce, and do kind of consume even in middle of this pandemic, sitting at home.
Mm. Samir, welcome to the conversation. I was just getting some opening thoughts from everyone, how they're feeling about the landscape as it stands right now. Where do you stand on that one? Are you feeling optimistic? Are you a bit more cautious given what's happened so far?
No, so I think you divided it into two, right? I think obviously when it comes to health and people's health and safety, that we're all very cautious, very careful. And I think that's the priority for everyone at the moment. And I think that's been quite remarkable across our portfolio, not only for internal employees and and for the ecosystem, how it is valued and whatever they could do to help each other and across the portfolio, across different across the country. I think so that obviously we're cautious. We see how that plays out because it is obviously the wave is quite strong. I think when it comes to the tech ecosystem, we continue to be very, very optimistic. I think the businesses have now gone through a couple of shocks, and I think when those shocks happen, we only emerge stronger. We emerge stronger in our cost structure. We emerge stronger in our human capital. We emerge stronger in the acceptance of the product. And that tailwind has obviously helped these companies a lot across consumer, whether it be B2B, whether it be food delivery, whichever one you kind of pick. And I think those tailwinds are here to stay. So once people are kind of used to using the convenience of technology and their smartphone, I think going back is not an option. Couple that with that because we've gone through these shocks, the cost structures of all these companies have really improved. So it's kind of a win-win over there. And I think as we go further, as people become more focused on just in time, the convenience, these companies will be very well placed to win more and more market share.
Kasturi, I'm coming to you at the end because you're looking at this as an observer as well. So you 60-degree view of what you see, that what they're seeing right now in terms of fund stationary in nature. Would you agree that this is looking like one of those in the last couple of decades, a couple of stream in terms of a pipeline?
Sorry, Mitali, I couldn't hear you at all. Sorry.
Kasturi, is my voice?
Can you hear me?
Net as always, for you. I was asking whether you think this is looking like one of those inflationary phases, or whether you think the money is here to stay this time round. Is it looking more sort of, robust and clear the pipeline?
No, I think the fact is that there is a lot of dry powder, right? I don't think that has really been the issue. Even when we started the last year, we were all a bit more more worried about how the whole year would look like. But as it turned out, the 2020 year looked quite good. There was a lot of fundraising. Startups raised a lot of money. Your little the nugget you played ahead of our session kind of showed that too. So if you look at where the dry powder is, and you look at all the what the panelists are saying here, that it's really about technology being the driver of growth, which is what we have been waiting for. So in some sense we are leapfrogging, using a rather unfortunate time to perhaps take the businesses into people's phones. Right. And so therefore, if you look at that kind of a business model where it is really focused on the consumer, focused on the user, it's tech friendly, it's easy to use. I think the money is certainly here to stay. It's a difficult time at this point in time, of course. And once we tide that over, I think the same type of cycle is perhaps what we will see again.
Lavanya, aside from the fact that there's a lot more money that's just come into the game right now, there's three other things that seem to stand out over the course of the last couple of months. One is that deal sizes have gone up substantially. The second is that rounds are getting closed up much faster. And the third is that many of these startups are actually raising more than they sort of aimed for or intended to. What do you put those three things down to?
Yeah, so great question, and a few different thoughts on that. One is, if you look at the slew of companies that occupy that late stage bucket, that have been around anywhere from 5 to 15 years, that have been through really tough times, achieved amazing product fit, and are now compounding at a very different scale, you start to see interest from very big pools of capital. Right? And that's one of the things we're seeing in a lot of companies, where they're getting inbounds way ahead of needing to raise a round. And the way they're approaching that interest is to say, look, there's a huge market share gain opportunity ahead of me. The capital is available. I've done the tough job of achieving product market fit. As Sumer mentioned, cost structures have been curtailed a lot. They can now go and really attack new white space and also consolidate other smaller businesses in adjacent segments. Right? So I think the companies themselves are raising a little bit ahead of what they had potentially planned to, because they're seeing the investor interest. But in a lot of cases, there are clear use of proceeds for that. And there's a clear sort of vision and articulation in the founder's mind of where that business can go. The other big change we're seeing is, as these companies prepare to go public, they want to raise these large pre-IPO rounds to almost valuation benchmark. And for that, they need a certain critical mass of capital to attract the right kind of investors. So we're seeing both the demand and the supply side come together nicely to make these great deals happen. Now, Zomato, for example, just filed for an IPO. Let's see, how that goes. But incredibly strong investor interest in these breakout category-leading businesses globally. And I think just taking a step back, if you look at listed as a percentage of total listed market cap in other markets, that's 14% in the US, it's 20% in China, India is sub 2%. Right? And if you add up all our unicorns for a minute, that won't even get you to 10%. And so if you think of the appetite globally that exists for this kind of paper, because it just hasn't been there yet, the ecosystem has been in creation mode leading up to this, it's really quite incredible, Mitali. So I think those are some of the ways in which I'm interpreting the demand for these companies and this type of paper.
Karthik, comment on that. What do you think is driving these changes that we're seeing, and very sort of visible changes in the funding atmosphere?
No, I think I'd surprisingly take a sort of counterintuitive position and say massively everyone's massively sure of what bets they're making, right? It's not frothy. The conviction is what's leading to higher valuations and deeper checks, more than ever before, I would argue, right? And so even when we went and reassessed what would we do in a year like this, we haven't done too much by our standards. We used to be high frequency, but we are maybe 7-8 investments. But in all our follow-on investments, we're actually playing more deterministic. We've actually taken more capital. We've hustled, raised opportunity funds, secondary funds, and actually doubling down on our winners from 4, 5, 6 years ago. They've done all the hard work, and now we think is the period where they're actually going to take off massively. So there are two drivers, therefore. One is evident in the numbers. So numbers don't lie, and so you're seeing traction, like, curves pick up after the first 3 months of shock last year. The second is the templates from the relative templates that Lavanya was alluding to. Relative to a market comp elsewhere in the world, we're just on the ground floor of these opportunities. So if you look at the biggest companies in those spaces, they're much, much, much larger than what we have in India. So one could argue that there is no, valuation methodology or metric that allows you to get that comfort that this company should be worth 2 billion. But nobody is betting on that. They're betting on the end state outcome becoming a 10, 15, $20 billion company. And there are large investors, whether it's Sumer here or Tiger or Falcon Edge, who are willing to make those bets, given that they've seen these trend lines before. I think that's what created the 2015-16 wave. There was maybe a tad premature, but the fact that in a post-geo, post-COVID world, we are able to demonstrate that this is here to stay and will only grow very strong this decade, means that a significant percentage of the growth in GDP will flow to these providers, not traditional, layers of infrastructure or traditional, sets of commerce players or that's impossible to build. You won't see another Future Group or DMart get built out, right? The big ones are there. They'll stay there, and the rest of them have to be built using new business models. And that's where I think that conviction. These are conviction checks, if you ask me.
Sumer, is there a lot more money sort of banging at the door, waiting to come in as well? Just the number of funds between 2019 and 2020 has gone up. The focused powder, the India focused powder seems to be quite steady and dry at this point. What's your sense of, what money could look like exponentially over the next couple of years?
No, I think what Lavanya and Karthik have said, right? As a percentage of GDP, if you look at our market cap, I know the tech investment numbers sound big, but as a percentage of, if you take the Nifty market cap, is still very, very small, right? And the opportunity is what I always say that, today digital is not center of plate for you as any industry. So whether you want to call it omni-channel, digital, click and mortar, whichever way it is, it has to be center of plate for any industry. And I think the belief is that the startup community, with their DNA, with their tech-first kind of approach, is much better placed to win that than the traditional industry. So there'll be a shift from unorganized to organized, but there'll also be a material market share gain for the digital-first companies. And we've seen this across, I think, various industries from B2B to B2C to logistics to wherever it might be. And the primary reason for that is, like, when we think of consumers in India, if you were investing in India 7, 8, 10, 15 years ago, and you asked a consumer company, how would you win? He said, oh, well, there might be 10 or 15 million kirana stores in India, and I need to make sure I distribute, and my distribution should reach as many kirana stores as possible. Today, if you speak to a consumer company, and a lot of our portfolio on this panel, said there are 700 million smartphone users. How do I get to those users? 600 million of them use WhatsApp. 100 million of them only probably transact on e-commerce. We still have 500 million who are every day on WhatsApp, but they're not transacting. And I think that's the approach. So there is the India GDP growth, there is the unorganized to organized, there is the digital first victory, which has to be there. And if you're a traditional industry, you will also move to digital. And I think you put all that together, plus the young demographic, the cheap data, the geo impact, Obviously, there's liquidity in the world. There's no doubt about that. That will drive up more value. But if you put all that together, it's the perfect storm. So will capital stop? I don't think so. Will valuations go up and down? That's cyclical, always be 10, 20% here and there. But I think also that there's a lot of responsibility for the ecosystem, right? Including the investors as well as the companies, that when we do take on such capital, it's deployed fruitfully, and hopefully there are a bunch of companies, lined up to go public. And I think that will be the last step where the capital has come, product market fit is there, the profitability is there, the unit economics is working. Now there will be material secondary exits as we see these companies going public, either here or abroad, depending on the rules. I think that's the last step, and then the ecosystem is mature and coming along.
Ankit, the money is there. Are the stories changing? I mean, we were just speaking with a gang of startups. So everyone agreed that, of course, Comtech is really up there. Health tech is up there. Nobody wanted to talk about EdTech because of the amount of attention they already get. But there was a point being made about the fact that perhaps VC itself is not looking carefully enough at deep tech, at AI, at, other stories that do need that kind of hand-holding financially and otherwise. Do you see any sort of evolving stories aside from the ones that are being documented at this point?
So I think what we see is the central theme that we're seeing in last 2 years, any businesses, startups which are trying to digitize offline commerce and enable micro entrepreneurs, be it kirana stores, be it teachers, be it skilled workers, be it homemakers, has been the central theme where initially startups were thought about they will dominate and own the marketplace and kind of disrupt the existing ecosystem. I think the most fantastic thing that has happened in the last 4 to 5 years is most of the startups are now enabling the existing kind of players in the ecosystem, mostly through technology, through distribution, and through better products, right? So I think that opportunity itself is huge. Be it across education, be it B2B commerce, be it health tech, be it fintech, be it availability of credit across different categories of businesses. So I think there is an element of technology that is going in embedded into all the different businesses that we are seeing, and even the complexity and the level of technology that is kind of going in has also become very modular. Today, it's become very easy to start a business and immediately grow to millions of dollars of revenues by raising some amount of capital, where probably you don't really have to build a HR tech stack, you don't have to build a marketing stack, because all those modules are available, and there are companies which are only focusing on that, right? So today, for a commerce company, for an e-commerce company, or a beauty company, it's becoming easier for them to become very large companies nationally, because those tech solutions, tech stacks are available, which are being built by many other companies. And I think last very important point is the tech talent in India. I think what we saw maybe 7 to 8 years back, that has changed significantly now. So when you hire people, the people already come with a lot of experience in managing tech solutions in large companies like a Flipkart or a Swiggy or a Byju's, right? So when you hire those talents, you automatically kind of get a very good push start in terms of technology that will enable company to get to the next level. So very early stage companies are able to take that advantage to get to a very advanced level by getting that tech talent, as well as of course the right amount of capital involved. But I think it's been technology is playing a very important role. But of course, we do see a lot more less core tech companies. Of course, what we see in the US, what we are seeing in India today.
A lot of the startups were complaining about the costs of this very, very fantastic talent, though. So perhaps it's coming at quite an expense to them. Kasturi, I'd like you to come in on that, on whether you think there are now other avenues to start exploring for the VC space. I know the point has been made about the fact that there is great quality out there already, but is it time to start broadening the spectrum in terms of what you're looking for?
Yes, I mean, we've seen that with some of the VCs for sure. I mean, they do come to us with very unique kind of models that you would typically see in the US. Players in the IoT space, players in the deep tech space. But again, it's not a lot. I think the ecosystem around that has to be built up a little bit more, and I think that's part of the maturity point that Sumer was making. That right now we're really focusing on what is ease to consumer, what is ease to on a B2B basis, on a straightforward kind of a model. But if you kind of take that now and talk about a blockchain for some kind of a development around, let's say, if you look at the government, for instance, they are trying to use that with real estate, right? So something around that where you could be building for these kinds of complicated issues where blockchain can potentially be used to keep away fraud, and things like that. I think those are areas which are not seeing as much traction, but potentially could see a lot more. One thing that I think is very very interesting in the conversation is while startups are growing really fast, I think one of the key areas where more attention needs to be paid is around the cybersecurity issue. And I think there is a lot of opportunity there for new age startups, for VCs to actually look at funding.
That's an interesting one, cybersecurity. Lavanya, there's another sort of interesting development that's happened, which is that the exits have actually gone down over the last couple of months for many of these VCs. What do you put it down to? And do you think that's a trend that's here to stay, or do you see that as a temporary phenomenon?
Yeah, so I think it differs a little bit by stage, Mithali. I think now we see it as sort of the golden decade of exits for the late stage in a lot of senses, where companies have really been building up to some type of outcome. But due to some of the externalities we discussed earlier on this VC, they've not had those windows of opportunity, because these windows of liquidity present themselves at different points in time. We're seeing one now with this large IPO window opening and a lot of global interest in these companies. I do think, though, that we see another big opportunity for off-cycle liquidity on the path to that type of outcome. There's a bunch of early investors who've done really well in young companies who don't necessarily have, aside from when a big primary round happens, providers of capital who in an institutional manner provide that liquidity, especially for the smaller check sizes, right? Because what we've been hearing back from entrepreneurs is really the early stage is very well covered. The late stage, in terms of large pools of hedge fund money, people like Sumer at SoftBank, that space is well covered. But the missing sort of 20 to 50 million check size, entrepreneurs keep telling us they would love to see more capital providers there, which also, in some sense may answer your question of why do exits for VCs in advance of maybe a very big outcome, be that IPO or M&A, aren't happening at the cadence they would like. So we're seeing that as a structural solve that the market needs, and many people are trying to solve that in different ways.
So, May, does it present itself as an interesting proposition to take a couple of steps down the ladder and inhabit that space as well that Lavanya says is not adequately inhabited or forested by the VCs?
No, look, I think we'll be. I saw the degree of the size of the fund, but we are flexible. I think we are flexible in industries where we need to be. I think on SaaS, like you've seen, we've done deals of smaller check sizes, and that's primarily because, they're very capital efficient. They don't really raise that much capital. And so I think we'll be flexible when required. I think the 20 to 40 is definitely lower for us. But like I said, it's industry by industry. And I think if Lavanya is filling up that space, it's yet another option for the entrepreneur. And it's good time to be an entrepreneur, so why not?
I think we've talked so much about the sexy spaces, the ones that are getting a lot of interest, that are getting a lot of traction. But we've got a very real situation over here of an economy that is in many parts quite hemorrhaged. We've got many parts of the services industry, including hospitality and tourism, that is really broken. Give us a sense of what's happening there, and give us a sense of what VCs can do to help that space.
No, I don't. I wouldn't ever put our industry on anywhere close to the social service pedestal. But we try to work very hard. No,
Just touch of the hand, maybe.
brutally capitalistic. So no, I think that Natalia, I don't have a solution for that, because essentially, what's become of technology investing is just people need to see a certain velocity and pace of sort of growth when the capital comes in. Right. Some of the early stage folks might take those risks, those bets, and be a little bit more patient. But I don't think growth capital will come and be necessarily patient. There are companies in our Fund 1 portfolio who have struggled through 6, 7, 8 years, who don't have the scale that attracts the really big investors. And they're actually getting a lot of love from private equity investors today because they're sitting at $150 million valuation and they can go to $500 million or so. So if you take companies in such sectors today which are struggling because of macroeconomic headwinds, there is nothing to do but to survive. There is no easy answer for that, right? As we exit out of it, I'm sure some companies will look far more interesting than others. Maybe there are some counterintuitive VC bets that are happening in that space, but we have struggled with our portfolio in that entire terrain. And broadly, the last 15 months have shown us, or 14 months have shown us that, India, if you're looking specifically at the Indian market, India is willing to adopt, accelerate, even enable from by government, etc. Anything which is need-based, anything which looks like a luxury or a want or something that can be postponed a few years, or it only caters to 5-10% of the country's top tier, is something that anyway automatically gets pushed out in terms of priority. So I think the big shift, if you ask me, is a lot of our portfolios domestically, whether there's a like Omnivore, which does agri only, or the number of companies that are doing fintech only today. So if you look at the early stage space, it's nicely broken up into a lot of portfolios looking like impact portfolios. Because if you're investing in fintech, health, agri, supply chain, logistics, consumer brands, all of these are they're being driven to the need of the consumer. And today, unfortunately, if you're talking about travel, like we have a intercity bus company called Intercity, right? They're thriving. So if you're solving for the right problems, you will get picked, you will get voted in. But if you're trying to say I will create, another option for air travel today or a variant of that, it's just tough luck. Or if you do, luxury holiday homes, it's just a tough market, broadly speaking. And I think those headwind sectors will take 2-3 years to recover. I don't think there's a shortcut to that. If you're a resilient founder and you're truly passionate about building in that space, you'll find ways to recover and stay alive. And that's what we've seen amongst the best of founders.
Ankit, you want to come in on that? Is it getting better but narrower at this point?
Yeah, definitely it is. It is tough. I mean, we do have few companies in our portfolio as well, which are going through that patch. I can tell you, agility is a word that we used to use a lot for startups. I think that's really been tested in last 1 year in certain categories. And I think, as Karthik said, because again, I would again reiterate, because of technology, because of agile cost structures, most of these companies are actually surviving well. And of course, we are all assuming that we will be out of it while we will get into a new normal. But I think most of those companies will come out. It will get narrower, but some companies which will come out stronger will have then opportunity to kind of grow extremely bigger with much kind of larger outcomes. But I think last 15 months also have been testing times where people have reflected back to see, can they pivot a little bit, get into certain other different business models which are not as directly impacted. But I think it's 6 to 9 months away from really kind of commenting on how strongly those companies can really emerge out at this point of time.
Kasturi, what's your sense of how much of the startup space is in pain and the VCs by extension of that, and how long you think it's going to take? Because often we spend so much time on the headlines of what's going right. I think we need to pause and just think about what's going wrong as well for the months ahead.
Yeah, there's no doubt about that fact, right? I mean, if you look at some of the businesses last year, each of them kind of had to sort out what their burn was, and and try to bring down cost. That was goal number one. Goal number two was trying to find ways to pivot so that you could continue to be useful, you could continue to make money. Now, of course, many of those startups could do that by sheer virtue of the kind of business models they were in. So, for instance, a client of ours, who was in the mobility space, kind of took a bit of a turn and went into the logistic side of things, right? So the pivot was a more natural fit. But if you look at many of the other startups, whether it's especially anything that is related to hospitality, whether it's related to travel, it's related to luxury, I think those are the startups which are really facing quite a hard time. It's not just the startups, of course. I mean, any kind of a business that has that kind of outlook or that kind of a model, I think for them, the one of the easiest things right now to perhaps do is take a hotel and turn it into a nice isolation ward, right? All the WhatsApps that we are getting now are about trying to find a different way to address not only a problem but also a challenge for the business itself to keep alive. So that's really the startups who have done well are the ones who have been able to shed some cost, to be able to be a bit on the nimble side. But there is certainly a lot of pain. Some of the VCs are supporting that with a few more in rounds and bridge lending and things like that. But it's a tough market. We've had some startups who had to sell off a lot of the businesses such that they can continue to focus on the very, very specialized core line of function that they want to focus on. So shedding off a lot of fat as well. Yeah.
Lavanya, I take the point that social service and venture capital funding are sort of miles apart, and never the twain shall meet. But has there been that process of pain for some of the startups that you've been involved in, and really how do you support them through a period like this? I mean, I understand relooking business models and relooking what your goals are, but what are the sort of the real ways in which a VC funder can actually come in and be of some support to the startup that they're invested in?
Yeah, Mitali, it's an important point because look, we're companion capital to the founder, and we need to continue to be of service to the ecosystem through cycles, right? So how we conduct ourselves as partners at times of stress will really determine how we continue to be viewed by the entrepreneur community. So from a trifecta perspective, I'm a new entrant to the firm, but I've been really blown away by the founder love that I've experienced for the co-founders of the platform. They've supported businesses deep in the midst of COVID that then grew, 10x in valuation 9 months later. Because sometimes it's easier for founders to take a venture debt product at that time versus dilute equity in the middle of a lot of stress. So I've seen very, quick and supportive action on the venture debt side. From an equity fund perspective, we are just in the market, getting ready to launch, and so don't yet have a portfolio or history. But I've personally connected founders with pools of capital globally through my prior history at Goldman Sachs, to make sure that at least from a provision of capital and being humane to the pain they're seeing, we're doing what we can, right? I think ultimately, exactly like Karthik said, we have a fiduciary responsibility to invest well and return, well to our limited partners. But it's also, equally important to show up with capital and support at tough times, and then, hopefully the ecosystem will prosper, and we will along with that.
Kasturi, let me start with you and then sort of go around the table on this one, because every conversation always also revolves around what regulation is doing and what regulation can do better. What would you like to see over the course of the next few months in terms of a more supportive environment for VCs themselves?
So, of course, on the VC side, there is always a lot of talk around the structures of the AIF and things like that. So, that's all out there. There's no real point in getting into that particular point. But I think if you want to build a stable market to help more VCs come into the country, bring more of the capital in, I think building the right ecosystem, the legal ecosystem is an important one. If you look at the courts right now, because we have just not had the ability to have physical hearings, the backlog is going up. Same case with the tribunals as well. I mentioned earlier about cybersecurity. I think the privacy bill really needs to come up and become law right now. I think that is really huge need of the hour, given the massive amount of data now companies are collecting, and on the back of very, very flimsy laws. So I think there have to be bolder steps taken by the government to make sure that the ecosystem in which we operate, it continues to build trust with the consumer, because otherwise there is little reason for the consumer to want to stay there. So to my mind, whether it's taxation laws, whether it's trying to simplify the Companies Act, or the provisions around the whole startup ecosystem itself, I think the robustness of the laws that exist as on date, as well as trying to allow for something as simple as selling the retailing of medicines online. Right now, that it has been a gray area for a long time. But we have thriving models, Farm-Easy and various others who are doing that. Now, the government really needs to come forward and put those into place such that these business models become real, they are robust, they're able to attract a lot more money.
Sumer, you've been long established players within this region, but if you had a wish list in terms of regulatory changes or tweaks that you'd like to see, what would that list look like?
No, so I think the government is, been super supportive. They're aware of the issues. I think they are holding various, forums with the startup community, with the VCs, with the investors, with the founders themselves. They're actually pretty open to hearing all the solutions and the issues, because it's a very dynamic industry also, right? So things keep coming up, new industries keep coming up. You mentioned Farm-Easy 4 years ago. Now it does. So how to kind of deal with it. So I think they're pretty proactive. They understand it. I think what will happen more, and I think we're confident, is that start treating the online bucket at par with the offline, and I think that will just take some time because it's happened so quickly. And I think that's the consistency which we need, which they've done, and I think as long as that continues, that'll be super helpful. I think so. Nothing overly to ask for. I think it's on track.
Karthik, for you?
So I'm also sit on the executive committee of the IVCA, so we have a long list of demands. it'll be an entirely different panel if I have to go through them. But no, I think I'll simplify and say that I think somewhere the government has to trust that the industry in what they're doing for the last 15 years and sort of release more sort of of the shackles for the industry, right? And unfortunately, while they were seemingly progressing in that direction, we got a sense last year that they're again becoming very conservative and sort of stepping into very tightly managing, for example, how managers like us actually manage the capital, what our processes should be. It's so difficult to operate within paperwork and constraints in a fast-moving industry, which requires us to focus elsewhere. And we don't have the capital and the wherewithal as a domestic industry to bear all of these, whereas most of our peers and colleagues who have overseas pools can move like at lightning speed. So somewhere you want to make this industry grow in the Indian context and become self-sufficient. Various panelists brought up the idea that there are big gaps in capital. But the only way that will get filled is by the industry sort of mushrooming domestically. And so in the domestic context, you've got to free up the flow of capital both in and out. You have to make everything that relates to exits, everything that relates to entries, almost seamless, right? Otherwise, it's not going to happen. Like you can't have a institutional trading platform or a conversation around an overseas listing and then be in 18-month loops around putting enough, erecting more and more boundary conditions such that the possibility itself becomes unviable, right? And so you got to, if you truly want to unleash the economy and you're sitting on some of these assets which are waiting to erupt and there's enough foreign demand for them, especially in the equity markets, then why aren't we unleashing the power? Rather than being worried about, who are we protecting in some sense? Sometimes is a wonder for me, right? Because in a lot of these companies, 60-70% of the shareholding is actually foreign investors who've enabled venture and private equity to get to where it is. So they will take care of themselves, right? You don't have to protect them per se. And so there is I think there is a impetus that we thought COVID would be a fundamental sort of shift in their thinking, because if anything that we needed in this decade, it was actually government just sort of increasing ease of business to a different order of magnitude. Unfortunately, we haven't seen that. And I don't think the fact that we can't meet anybody other than on screens has really helped. That's not the way certain organizations in the country work. And while it's been very efficient, because we've never had to take a flight and met ministers and administration on Zoom calls, super. But I don't think the needles have moved far enough. There have been some changes, but I think regulatorily we just need a lot more help if you want this set of people on the screen to actually make their companies move much, much faster.
Ankit, you want to come in on that? And I just want to add the point that, I wonder if people realize the value addition that new ventures present in themselves, both in terms of job creation or the taxes that they pay. I wonder if people realize that enough.
Yeah. So I think regulations and innovations will always play a catch-up game, in every economy, whether developing or developed. And I've taken a lot of feedback from founders who are kind of create a very different model where regulatory hurdles are there. I think the consistent feedback is not really the presence of guidelines and regulation, but actually consistency and clarity in it. I think what sometimes hurt is that that there's no clarity on what we can or what we cannot do, and then the consistency part of it, that today what we think is right suddenly can change after a year. While we understand from government's view that look, they have to look from the larger good perspective, and they also have to be dynamic in terms of putting together the regulations. And look, let's accept it. It's not also easy to put these regulations in place where the companies change at very rapid pace, right? And which can adversely impact certain sections of the society. But there is definitely a lot of room to give a lot more clarity and consistency in the realm of things that we operate under. And as you said, I think there is a huge societal impact on what the innovation ecosystem is kind of bringing upon, right? And more so that we have seen the impact of it, especially in the last 1.5 years, in every possible sector, be it healthcare, be it payments, be it B2B commerce, be it healthcare. I think, and most importantly, job creation, right? So I think that is, we all have to accept it's mainstream now. And we need to definitely have ease of business with a little bit of more handholding and speed of execution from the government side.
Lavanya, final word with you. What is it that you would like to see in terms of regulatory support, especially for the guys who are just starting off on this entrepreneurial journey? And God knows it's not easy.
No, absolutely. I think, as an Indian vehicle, we're a Cat 2 AIF. We'd love to see less friction around exits overseas, because we want to make sure that the investors that come into our funds get the benefit of value creation even in other markets, right? And currently the tax frictions are such that that's a very prohibitive proposition. So that's one. And secondly, Karthik was talking about attracting capital into the country. the co-investment rules for vehicles like this are still not really clearly defined. And so it's difficult for us to bring along big pools of money that we can manage, individually into investments in the current structure. So I think SEBI is definitely thinking carefully through a lot of these issues. But, Mitali is a new fund entrant in the market. These are some of the things, ease of entry with sidecar pools of capital and ease of exit through overseas listings are two aspects we're carefully thinking through.
Ladies and gentlemen, fantastic conversation. Thank you so much, all of you, for joining in and weighing in with your thoughts. So much to think about. I hope someone is listening, or at least the ones who should be listening are. Thank you again for joining in today.
Thank you so much, Tani. Thanks.
Thank you, Mitali. Thanks, everyone.
Thank you. Bye-bye.
So full 360, you heard the point of view from the startups, and then you heard so much value addition on what's happening with the venture capital space and what could be done going ahead. Of course, like we told you, the idea is also to get really specific and niche with different sectors and see what can be done in terms of growing for the better in the months ahead. We're going to be focusing on infrastructure next. And before I introduce the panelists and the conversation, we've got another interesting factoid lined up about what the infra space has going for itself right now. So I think if you hark back to the union budget some time back, the two very key themes that came out was the focus on health, a vaccination program, of course, but also the strong push that was required on infrastructure from every which way, from the way it supports the economy and the imperative need to create jobs and so much more. Infra really is the nerve center from where any growth and recovery can emanate. That's the space we're going to really get deeply into and discuss. May I introduce the panelists who will be talking about that. Kavita Saha, who's Senior Principal for Infrastructure at CPP Investments. Abhishek Bansal, who's Director for Energy at Actis. Vinod Giri, Managing Partner, Direct Investments at NIIF. Sandeep Lakhanpal, who's India Head for I Squared Capital. Dr. P. Anbalgan, who's CEO of MIDC, Government of Maharashtra. And Neeraj Menon, partner at Trilegal. Steering that conversation will be Utpal Bhaskar, and that chat is coming up in just a little bit.
And thank you, Mitali. This is absolutely a segment that. Thanks everyone for taking out time to join this conversation. Thank you, Mitali. This is absolutely a segment that we would like to focus upon. This also comes at a time when there is a lot is happening in the world around us. This also comes at a time when the crisis, and when we are seeing the second wave, which is absolutely testing India's infrastructure capability, be it in terms of logistics or even health infrastructure. And in fact, some of the things that, some of the stuff is actually pretty obvious, some of the things are also out there for which a lot of investors are looking at what are the kind of opportunities which are presenting out there. And also, it comes with a certain sense of a concern as well, given that where will this story finally land? We couldn't have a better panel than this. In fact, we have this is a power pack panel, if I may use the word. So, in fact, without much further ado, I would like to start the conversation with Ms. Saha. Ms. Saha, there's a crisis out there, and not as in, and every day there are scary stories coming out. Given in all this doom and gloom, what is that gives you the amount of confidence which is there? And given that you are one of the largest purses to invest in the space, in infrastructure per se, across sectors, how would you look at it?
Yeah, thank you, Utpal. Uh, you are right. I mean, the situation and the environment around us, especially on the health side, is pretty concerning. And, the situation has actually turned pretty grim within a very short space of time. But I think key point is that we and investors of our ilk, by our very nature, are long-term investors, and we take a long-term view. And in that context, I would say that the long-term growth story and the overall resilience of India, we feel, is intact. Yes, it has taken a knock. It will take concerted efforts to recover and set it back on the growth trajectory. But if you do look at, the reprieve we had in the interim and what happened to the economy in the interim, which is that, growth came back pretty fast. And I think that kind of sets the stage for our confidence that it will come back to the trajectory. And one case in point I would like to say, and I would like to take the specific example of toll roads, because that does constitute a very important part of our overall investment, not only in India, but across the globe. And if you recall this time last year, there was actually a point of time when the tolling had been suspended across all national highways. And you therefore had a series of weeks in which zero toll was collected by order. And then after that, there was a series of, localized lockdowns by various state. And so it took quite some time before, the lockdowns themselves were lifted and business started in a slow manner. But if you look at the kind of recovery that roads had in terms of vehicles coming back and tolls getting collected, it was almost miraculous, in the sense that once the last lockdown was lifted, you could literally see roads coming back, the traffic coming back, and the activity picking up.
Mhm.
And that kind of having gone through that phase, I think that derives our confidence that we will come back, and hopefully we'll come back stronger.
Right. Pretty encouraging words. I would like to get Sandeep into the conversation. Sandeep, because I Squared Capital, it has one of the largest portfolio of roads in this country, and I'm taking a cue from Kavita to take this conversation forward. Sandeep, your views on it, because given that obviously these are the kind of metrics when one looks at, be it electricity consumption, uh, uh, toll collection, refining volumes as well, how well the refineries are performing. How would you look at this? As in how though it does involve a little bit of crystal ball gazing, but when do you see that happening?
Sure. So first of all, thanks for inviting me, and I hope everybody and your family and dear ones are all safe in this environment. Actually, it's an interesting question, Utpal. Yes, Cube Highways, which is an investee company of I Squared, is the largest toll road operator in the country today. I actually fully concur with Kavita in terms of the intactness of the long-term story of infrastructure in India. If you look at infrastructure investments, I think there are two or three things which are very vital, and I think if we ask ourselves those things, you will find that all those two or three factors are intact. I think number one is the need for infrastructure investment, and I think needless to say, the need for infrastructure investments in 2021, as we said, said today, I think is large, and it is going to remain large given the complexity and size of our country and our needs. So inherently the need for infrastructure capital into this country is quite large. So therefore, that's one very stable pillar of why we say infrastructure is the long-term story is good. And I think the other thing is, if you look at, by and large, across various political spectrum, whether it is a UPA government or an NDA government or a coalition government, the recognition that infrastructure has to be largely financed by private capital, I think that's a very uniform strategy and thought by all the governments concerned, starting from late 90s to now. The kind of regulation, especially, and you talked about toll roads, right? Look at the kind of roads we had, when we were all young children, mid 80s, late 90s, to where we have come now. Yes, of course, it can go up and down every 1 year, 2 years, 3 years. But largely, if you think about where we were in infrastructure 20 years back and where we are now, I think the entire scenario has changed. You look at roads, you look at power, you look at telecom. I think the need, and that has actually happened because the government partnership has been at play. So I think I agree with Kavita that couple of these pillars remain sound, and therefore I do expect that the long-term story of India will remain intact, and this may be a minor blip, and hopefully we'll come out of it quite strong.
And a very encouraging word. That's actually absolutely, the percentages looks very good right now. Starting from Kavita to you, the way that you have articulated it, and thanks for that. I would like now to, in fact, you mentioned government, and we have with us Dr. P. Anbalagan, who's the CEO MIDC, Government of Maharashtra. Now, given that, while I do understand that obviously when you guys are investing money, you absolutely, the kind of due diligence which happens is, and there is quite an exhaustive process there as well. We have him to, I just want to understand from him that given that MIDC is as an organization, as an institution, they have set up this plug and play model. And given that there's a huge focus on manufacturing in this country right now, given the PLI scheme, 13 sectors covered now. Obviously, in fact, day before yesterday, Mr. Amitabh Kant on this pan in one of the sessions was talking about how they're looking at getting into green hydrogen and things like electrolyzers and stuff and all of that. So, sir, I would like to understand from you that while Maharashtra is one of the states which have been severely impacted, but given that in such a scenario, how do you see such investors and what kind of a help that you will be able to extend to such investors? I think, sir, you're on mute.
Thank you, Utpal, and thank you Hindustan Times and Mint for hosting this event. First of all, I would like to say, when the lockdown was first announced, basically the attempt was to make the minimal interruption in the supply chain or value chain. So initial intention was there, like at least we should go with essential sectors, food processing, medicine and equipment, and also those sectors where immediate stoppage is not essential. So technically we call it as a continuous process, where majority like infrastructure related like steel, cement, everything comes in there, electricity, everything comes in there. So they have been allowed, and state, it was like the first of its kind, put up its like own self-certification mechanism within 3 days, and close to 1 lakh units have done. When you go back to like September, and when you look at what exactly the manufacturing impact after the COVID, we normally look at basically a GST recovery, GST collection. Second is on power consumption, electricity consumption. By September, I think I would say 2020, barring like I would say Mumbai, where it was power consumption was close to around 90% of the last year, rest of Maharashtra had almost close to 100%. Though it was a staggered shift, it doesn't mean that 100% productivity is there, because of the less staff. Maybe there are instead of one shift, people may be doing in multiple shifts. So I am consuming more, but still it was a great thing. Our entire supply chain, particularly when Government of India also has come up, or even the state governments. Initially, there were of course initial hiccups. There were field level issues were there, particularly at the lower level. It was like not the command was totally passed on to the lower level. There were interruptions, but of course, the government was quick enough to pick up, and there was absolutely, as far as goods are concerned, their commutation, their transportation, absolutely, it was allowed totally without any restriction. Even now you can see, even after this break the chain and the second wave also, then even here in state of like Maharashtra, which almost close contributes almost 15% of the industrial productivity and industrial production, close to 1/5 of exports. So where also major sectors have been, particularly export-oriented units, all the important sectors have been covered. Even like entire supply chain is being tried to maintain. Of course, there is impact is going to be there. With that, like schemes like Atmanirbhar Bharat and also PLI, with an national, I think NIP, National Infrastructure Pipeline, almost worth of almost close to 111 lakh crore rupees, and with 13 sector PLI close to 2 lakh crore rupees. And major were there, I think, electronics, component manufacturing, and also you have an auto. You have a host of the sector from food processing to like electronics, consumer electronics, all the sectors, it's textiles, all these been covered with these two. But basically now 2025 we are aiming to become like 5 trillion, and also to create close to 10 crore and 100 million jobs. Then absolutely the execution is going to be the main thing, and we should recover fast from this second wave. Hopefully there is no third wave. Then if the infrastructure projects are going in like time, because now everything is being rescheduled, because there is still lockup even for an MIDC like organization. Whatever I was aiming to put up a water supply scheme of 400 ml in for MMR industrial thing, I was to commission this year. I will be commissioning 12 months or maybe 16 months later. So everything is being rescheduled. Particularly even this is for a smaller water supply project of 400 million liters a day. But think of other basic like grand infrastructures. And Maharashtra is home to more than 30 plus mega projects where close to 40 billion investments are being planned. Samriddhi Corridor, Trans-Car Harbour Link, we have a coastal road. There will be impact. Only thing is government and every private sector players, particularly the contractors, EPC contractors, turnkey projects, we should like pick up, and I think we should get to learn with this pandemic.
Right.
And see that we also in tandem with our timeline.
Right. In fact, you have made a very interesting point about how, while it might take time, say for example, there's a delay that you talked about, 12 months delay, but it will happen. On that note, I would like to bring in Mr. Arpit Agarwal in this conversation. Sir, as Brookfield, you have been present across the sectors in India's infrastructure story. Given that the way that this pandemic has struck, and obviously right now the focus is on to save lives, there are multiple transactions that you would be involved at this point of time, but also you're also been handholding a lot of other companies as well. How do you see that playing out on your portfolio, sir?
Utpal, I don't think Arpit is on the line right now.
I don't think Arpit is there, Utpal.
Oh, okay. So let me get Abhishek into this conversation. Abhishek, in fact, when we look at Actis, Actis has also been an important infrastructure player. Actis has been investing in clean energy firms. Actis has been investing in fact, it has been looking at roads at this point of time. I'm sure some of the stories, in fact, Mint has written about it. How does this the second wave pan out for your portfolio companies here, or the probable investments that you're looking at this point of time? Are you putting it at hold, or are you kind of, it's a wait and watch strategy right now?
So Utpal, first of all, thanks for getting me in this conversation. So look, from a pandemic point of view, I think the general impact of the pandemic, whether on our portfolio and on the sector in general, whether it is renewable sector or road sector or others, the pandemic impact has rather been benign, right? Particularly from a commercial standpoint, right? And why I say that is, for example, if you look at our sector, which is renewables, where we are most active, we got a license to operate throughout the pandemic last year, and we continue to operate very well even during this year. With actually our receivable period in the portfolio actually went up, or went up, meaning, I mean, it got better during the pandemic period, right? Because a lot of these discoms were given loans by the government and which they used to actually pay people like us, right? So actually the pandemic has not had too much impact except some construction level issues and execution level issues that came around during the pandemic time, and for which of course the government gave adequate time extensions under the relevant PPAs or other contracts, right? And so in general, governments around the country, and execution is obviously very state specific and region specific thing, right? It's central government really does not really control execution as such on the ground. And so from that standpoint, I think I must say that the role of the government has been quite positive, right? Now in terms of future, we, just like Sandeep said or Kavita said, we continue to be quite positive on Indian infrastructure. We have been very active on renewables. We are now trying to expand our activities beyond renewables as well. So let's see where it goes, but we will continue to invest very actively, at least on the renewable side, as well as on some transportation sectors like roads over the next 5 to 10 years. And of course, we will play different strategies in different cases, right? So, for example, in renewables, we are good at across the chain, right? So we do greenfield development, brownfield acquisitions, everything. On the road side, I think we will, at least for now, stick to more acquisition of operating assets, and therefore, we'll just choose our sectors and the way we operate in those sectors in a very selective approach, right? Which is what I think all the panelists on this forum will also do. But
in
general, we continue to be quite positive.
Right. And thanks for that. I would like to get Vinod into this. You mentioned something very interesting about clean energy. Obviously, we have seen this, and I would like also Kavita to weigh in here. We have seen this absolutely in this scramble for securing projects. There is this 1 rupee 99 rupee tariff for solar, and there was this dash which has happened, and then obviously then we saw this entire clean energy story unfolding, so to say, with what a Andhra or a Punjab or even the delayed payments from places such as Telangana and elsewhere. Vinod, how do you, while obviously there is this there is this shadow of this pandemic where we will see, and as we saw in the first wave, that the load shifted from the industries to the households. But obviously, it's not very, from a discom point of view, obviously not from a generator's point of view, but from a discom's point of view, the real meat is there in the CNI space rather than the households, given the tariffs which are there as well. How do you see this playing out for your investments? Also for the opportunities that the space has, given that NIF has been quite active in this area.
Sure. Thanks, Upal, for that. See, as far as I think renewable sector is concerned, as most of my other panel members have mentioned, I think the long-term growth still remains intact, right? And if you could have seen, and to your point, an interesting one is, despite the fact that industries for most of last CY20 were really not operating at max capacity, right? And the way we have seen demand coming back, let's say the last 2 quarters, September and the March quarter, we have been back to the consumption level relative to the previous year. So, on every parameter, whether it's peak demand or average consumption, during the third and the fourth quarter of last fiscal, we were more or less back to the previous year numbers. Now, add to this an interesting parameter in terms of industrial production, right? We are still we have been waiting for capacity addition in our core sectors like steel, cement, and some of that hopefully is much closer than what we have anticipated in the past. So imagine a situation where you are going to see a healthy demand, despite the fact that energy efficiency is at play, and that also has had an impact in terms of the overall energy consumptions. But once industry comes back and starts operating at full capacity and incremental capacity addition keeps on happening, I think the demand side will continue to remain strong, and potentially in the next 2 to 3 years, you could see potentially demand really coming back. Now, if you look at it from a supply side perspective, given that there's not much happening from a thermal side or from a nuclear capacity, or hydro takes a much longer time to really steam. The only option as a country that we have is renewables, right? So there will be sort of demand. And for us to meet that demand, a renewable capacity addition is the only way, right? So of course, we have seen some challenges this year. It's not. I think over the last almost a decade, we have seen panel prices remaining at elevated levels, and the short-term view is slightly more challenging. But despite that, if you ask me from a capacity addition perspective, renewable is the way to go. There's lots happening from a technology and to your point in terms of the cost really coming down. So I think the long term still looks quite healthy, right? And for people who are, and all of us have a significant focus on renewables, we're quite optimistic in terms of the way the demand will shape up, and that will really require a significant capacity addition, and maybe at a much higher rate than what we have seen over the last 3-5 years.
Right. In fact, I wanted to ask Neeraj this question, and as it's absolutely deja vu moment, because I'd asked this question to him exactly a year back in one of these panel discussions. Actually, the only thing was we were doing it in person rather than over our tablets and computer screens. Neeraj. I do remember this when you said that you did ask the question, and then I kind of it gave me a good headline actually, was that a lot of developers were looking for an extension, if you remember, and there was a time when extension was finally given. Right now, there is again a move which is happening because given that everything else, so when you look at the supply chains right now, and also we're talking about an interesting neighbor from where a lot of panels come in. There have been issues at their ports, as in the consignments are not getting cleared. In December, 19 cents per kilowatt hour went to 23 cents per kilowatt hour as well, which also kind of put a pressure somewhere. You are again in fact, not you. In fact, a lot of your clients are again today looking at an extension. Is it how do you look at this entire thing? 1 year down the line, the same questions being asked again.
So I think thanks for that, Utpal. First, I think the point to be sort of kept in mind here is that we have come a long way in a very short time. Okay, so in just a period of a year, a lot of maturity has come into the sector, both in terms of the players in the sector, in terms of how regulators look at the sector, and also the bureaucracy. So across the last year, we saw very mature decision making by the governments, by the regulators, where they sort of understood and appreciated the issue at hand. And they came up with reasonable, I would not say very benevolent, but reasonable extensions, to various situations, right? So and that precedent has been set, okay? And what is happening today is evident to all. There is no mystery there. So I would believe, or at least I would like to think that the same kind of extensions that were provided the last time around, to the extent the situations are similar, would be available even this time around. So I'm not so much worried about how the greenfield projects or under construction projects would deal with this situation. Hopefully, there will be similar and better support from the regulators and the government. What is though a bit worrisome is the sort of huge announcements that we heard in the budget last year, probably when the first wave was just picking up. How will those be implemented, and how much of that outlay that has been set out for infrastructure and core infrastructure will actually see light of the day? Because now suddenly you are talking about states and center both wondering what went wrong with their health infrastructure and what kind of augmentation and strengthening is required there. So I have it's a good fear that probably a significant outlay from that might actually first go into improving those areas, the entire health infrastructure pipeline, as opposed to spending it on other core infrastructure sectors as was envisaged. So that is the first sort of concern. Second is on our judicial system, and across the last year we have, while other verticals in the industry have picked up pace and they have survived the effects of the pandemic, unfortunately our regulatory and judicial system has not, mildly put. So and that is worsening now. I mean, the last 4 weeks I have seen various regulators literally shutting down. Okay, this didn't even happen in the first wave. regulators were operating online, etc., etc. But now you have courts and regulators shutting down. Now that is worrisome, because what that will lead to is a very serious backlog over our existing, humongous backlog that we already have. And in terms of, and these are not from a court's perspective, unless you're going there to save someone's life or get a bail, these are commercial matters are not priority at the moment, right? So these disputes, which may not seem very urgent for even a commercial court, may be very, very important for the parties involved. And that is worrisome on how delayed will that dispensation of justice be, or whatever, be it be for a regulator or a court, and what impact that will have on just investor confidence, continued investments. So that is, I think, a bigger worry at the moment.
Nicely put, Neeraj. Basically, you're talking about this entire. So when we talk about us being a rules-based regime, and given that something which is delayed, which is obviously going to hit the investments which have already been made. Andhra being a case in point, what happened there. I wanted to get Kavita into this. The point that you have raised. Given that there will be huge focus, there's absolutely right now everyone is ruining the fact that why isn't our health infrastructure so robust? As someone as huge as CPPIB, what is your playbook for health infra now for investments in India? Also, as was pointed out by others, you also have a significant exposure to renewable in this country. On both these points, how do you see it panning out? Because health infra is something that I'm very sure that it's been flowing out of our years right now. That health infra, there's absolutely no way out of it. As in, enough has been delayed, and we are absolutely going to rue the fact again if we don't act now. If not now, when?
Yeah, so thanks, Utpal, and I would tend to agree with you. I'll deal with the simpler part of the question first, which is on renewables, because renewables, just like for many of our ilk, they are a key part of our investment strategy globally. And in India, we will continue to explore opportunities within the sector. We have already made some commitments, and we have significant appetite to grow. And I would actually take it one step beyond renewables. We have recently, in order to create focused attention on energy transition, created a new investment group, which is called the Sustainable Energy Group, which is basically aimed at positioning us as one of the leading investors globally in sustainable energies. And that is not only renewable generation, but also other opportunities which are across the evolving energy ecosystem. I mean, that can include EV charging. We are investors in one of the largest EV charging companies globally. It could also be things like decarbonization, which is an emerging area in the light of climate change, but we do anticipate that it is going to become more important going forward. And this can even be distributed renewable power, which is what you'd call off-grid renewables, which can be pretty important in the context of looking at commercial and industrial power requirements from renewables. So having said that, so I think short answer is that a commitment to renewables continues to be in place. It is going to be a significant cornerstone of our long-term strategy in the infra and power space. On the healthcare, infrastructure, I think within the infra group specifically, which I look after for India, this is not infrastructure, because there are certain core elements of infrastructure that we look at, and clearly regulation, concession, long-term nature, somewhat predictable cash flows, as also given the fact that we are a long-term fund, we like to partner dominant players and put growth capital to work. So I would say that some elements of this are like infrastructure, some elements are not. But even in the past, you have seen actually a significant amount of private equity investment, if not infrastructure investment for
Absolutely.
investors, but private equity investors take fairly large positions alongside Indian hospital chains. And this has been actually an attractive area of investment for private equity, and I would anticipate that that flow or that interest will continue.
Right. And given that the nature of the so you are basically patient capital. So you look for these assets which are absolutely there's a the yield is predictable and stuff, and you're looking at long-term bets. In fact, it's and I do get it that in fact a lot of you present in this panel right now, there's a huge focus for hardcore infra and clean energy being a very important part of it. Also, this transition towards a low carbon economy, given that most of the countries around us have been declaring a zero carbon date for themselves, a cutoff date. There's a huge pressure on India as well as right this point of time as well, whether when do we say that we will go carbon zero. In fact, Neeraj mentioned something very interesting, Dr. Anbalagan. What he said was that the bureaucracy has also come up to speed. Given this entire crisis, what it has done is decisions are being taken in real time. It's not as if that, and there is this absolutely this awareness around that there has to be these are time sensitive subjects need to be dealt with accordingly. Your views on this, sir?
As it was rightly said, when you like in a situation like pandemic, the decision on ground needs to be like at much, I would say at the speed of light. Most of the state governments also have responded. Of course, it's my personal views. There are of course lacunae as always everyone can have, but there is a room for improvement. At least having experienced the second wave, I think it's a lesson for all of us that the tertiary infra, particularly at the district level, rural level, needs to be strengthened, and we need a great chunk of funding for health. Though, like of course, we have a private player also on a big chunk, but of course, government also to be on cannot like totally leave lift to the private players. So, government has an anchor role to play. Secondly, with this topic on which our entire conversation is being like around, when we like talk of like infra is for what? Basically, for like production, manufacturing, good, better livelihood. And you have a very great NIP and also Atmanirbhar Bharat, and also you have a budget also close to 20 lakh crore, which like Neeraj was also mentioning that how best these things are going to be like implemented, and particularly for in the time schedule of we have like 2025, almost we are halfway into that. We have another 3 years to go. That is a one thing. So you need to act on like project mode. You should act on like autopilot mode for all the major infra. Though luckily for last pandemic also, most of the major infra, though like metro, maybe airport, even railway things, they were not being like affected, though there were like initial thing. Secondly, when you even think of renewable also, the state's policies are also need to be in tandem with center's policy. I think the experts will really appreciate. There are 3-4 states which have like a very good policy for that. Secondly, if you need renewable to give push, then you also need to give a renewable. You have to give a push to solar modules manufacturing. But think of like in the 13 sectors. Think of a scale in which the PLI has been announced. It's a beginning, modest beginning. But secondly, still you have a custom duty on that. Still you have that. So you have an exemption on that. So there were also representation to do with basically whatever like you have a relaxation or very zero duty on those things. So you will do like then you are going to improve or really you are going to do make in India. You're going to give a push for that. Otherwise, ultimately, then you are again going to depend on there are only 3 or major players across the globe. We all know there are only 2-3 players, major players, and we are all doing only assembly. So with 16% manufacturing at close to decades, and when we are going to achieve that 25%, like China is at 36 and it's contributing close to 14% to global manufacturing. Ours is close to 2%, 1.8%. So really this Atmanirbhar Bharat and NIP, then all the particularly for a manufacturing, you need to have an ecosystem. When you are going to compete with like maybe Vietnam, Malaysia, or even, for example, even Thailand, Indonesia, Bangladesh, they are all competing with us. Not only Southeast Asia, even South Asian countries are competing with us. So if you really want a capital, one is like portfolio investment in private equity players, hedge funds, they are all coming. But whether the scale in which we can push up like a logistic or maybe integrated industrial areas, whether again that needs to be assessed. So you need to bring in a lot of foreign capital, but policies are need to be tandem with like GOI and state policy separation, like states policy need to be in tandem with. Then absolutely should be able to make it.
Right. In fact, a very interesting point. In fact, there are two of the things that you talked about. Obviously, for this ecosystem to do well, one is the cost of electricity, for which the industry has been complaining for a long period of time because the tariffs are absolutely as in one particular set is absolutely subsidizing the other. So that's how the industrial tariffs have been built in. We have been talking about this amendment to the Electricity Act for a long time. It was supposed to come up in this session, didn't happen. The other thing, which is also the cost of logistics. So in fact, the cost of logistics in this country is very high as compared to say what a China, say if a manufacturer is setting up the same kind of business in China or elsewhere. To which I would like to get to hear Sandeep's view on this, given that he's a part of both actually, so to say. And also now they are making a play for energy. So in the sense I'm talking about hydrocarbons. Sandeep, I'm referring to the BPCL bid. How would you look at both these areas right now, and as to what Dr. Anbalagan said, that obviously if you have to go forward, this has to be a part of that ecosystem has to be there. We cannot just you can make all these kind of big promises, but the work has to be done on the ground.
Yeah, absolutely. And I think a large part of the ecosystem is also stable regulation, basically, because time and again we've seen that the regulation and the intent versus letter actually it depends. It's left to interpretation of a lot of bureaucracy. So I think regulation I would add to as a part of integrated atmosphere in which you need to invite private capital. I think on your question on, of course, hydrocarbon, as you know, PPCL is there, so it's something which is going on. So perhaps we can talk about it another time. But on logistics, I think look, I agree with you. I mean, it's well known that the cost of logistics is probably one of the highest in the world. We cannot be competitive if we don't bring it down. And and while all of us have been saying that there is a lot of lacuna and all, but I actually look at it with some kind of silver lining. I think with things like dedicated freight corridor coming in, industrial corridors being built in, a lot of corporatization happening in the logistics space. NIF, as you know, is present in that space. We are trying to do something in that space. So I think there are things happening in that space. Yes, there is still a lot of things to be done. But I think as we get more private capital, as we get more stable regulation, as we get more not incentives but more enablers to have a very stable kind of platform setup and do ease of business there, I think you will see a lot of capital coming into this space also. See, in general, if you see, while we talk a lot about infrastructure and to your point on logistics, I would just make one general observation that we need to look beyond renewables and roads. If you look at Indian infrastructure, probably 80% or maybe even 90% of it is concentrated on roads and renewables. And I think as the government looks at more private capital, we'll have to look at areas like you said, logistics, waste, other forms of alternative energies, and that is something as the government, of course, we have the NIP, but typically getting how you create a platform and a framework for inviting private participation and capital into areas beyond renewables and beyond roads is a request that the government should look into, because that will actually broad base the investment cycles into the country.
Very interesting thoughts, Sandeep. Thanks for that. I would like to ask this question to Vinod. Vinod, Sandeep has made a very interesting point here, and you are a quasi-government investment arm. Do you think there's a lot of focus right now, and basically the question here is also that while infrastructure is a broad area right now, there are a lot of investments are happening both in green and in roads. Would you like to take that thought forward, what Sandeep has articulated, Vinod?
Sure. No, I think Sandeep is completely right. I think what we have seen in India is roads and renewables are really absorbing most of the investor interest. And I think the two large sectors that we could potentially benefit a lot if we could, get all constituents and ecosystem to work together is basically railways and urban infra. So even if you look at the NIP today, a significant part of railways and urban infrastructure investment is expected to happen through EPC, right? The PPP component in these two subsectors is very limited. And but if you see the opportunity size is huge because there's lots that needs to be done on both aspects. Of course, on urban infra, it's more of a state subject. But there is no reason why the kind of PPP models we have implemented in roads and renewables, we could potentially take those learnings to the state level and implement those models. So even if you look at today what's happening on smart cities, there's a lot of investment that's happening, but it's all happening either through EPC mode or the initial set of contracts are so small that you are getting a lot of participation from the smaller players. Nothing wrong in that, but if you really want to operate at scale, if you can get the PPP framework sorted, and this has been a work in say all of us have been sort of trying to pitch for this over the last few years. On Indian Railways, we are seeing some activity, but again, any PPP framework will evolve, right? If you look at roads renewable, it took some time to evolve. I think Indian Railways is at that phase where they are starting. Urban infra, I think we still have some time to go, and I think there we'll have to create some models, some successful state models, right, and really use those state models to replicate. There the opportunity is huge, and I'm hoping that maybe 5 years down the line, if you have a similar sort of panel discussion, hopefully we would be talking more on railways and urban infra, and then that look at from an NIP perspective. Today 80% is expected to come from state and central, 20% is expected to come from other sources. Now PPP in this whole NIP, which is almost 2x of what we have done in the last year, is 10%. Now, just imagine able to get another 5, 7, 10% but through PPP in urban infra and railways. Investors like us would be very excited about it because it's almost another 10 lakh crores kind of project coming into stream, right? So I think this is a subject close to my heart. So you see that, but I think there's an opportunity here. There's a huge opportunity here.
No, absolutely, Vinod, because we have been, as a publication, we have been tracking all these sectors. We see certain traction happening in the case of railways as well, where we are seeing that private trains, so to say. So there is I think that I don't know where the process. Yeah, so they have already the initial process has started there. There's a lot of interest there as well. In fact, I absolutely love this conversation, and the only problem is we have absolutely run out of time. Given that, in fact, some of the thoughts and some of the views that have been articulated here, I'm sure that through some of the coverage which will get published, which absolutely also gives us some kind of a food for thought for the policymakers as well. And thanks everyone for taking out time from your busy schedule to be a part of Mint's India Investment Summit. And this is absolutely a pleasure to have moderated this. I'm also looking forward to be in touch with all of you going forward as a publication as well. And thanks a lot. Thanks for your time. Thanks for joining me.
Thank you.
Pleasure.
Thank you, Utpal. Thank you, everybody.
Thank you. Bye.
Thank you for that. Thank you to all our guests as well.
Thank you. Stay safe.
Really strong structural conversation. Just before we dive into the next conversation, which is going to be equally large and complex in terms of the area that it looks like I'd like to give a quick and deep shout out to our partners. Thank you very much to our presenting partner Trideagle, to our co-sponsor MIDC, Maharashtra Industrial Development Corporation, and of course to our associate sponsor CoinDCX. Infrastructure is one big universe that needs attention, but real estate is the other. So much has gone down for that sector in the last couple of years, a big dip, a crash, some kind of recovery, and now of course focus on the mid to low income housing. That's really been the space that's come out and stood out. This against the COVID pandemic and the future for what might happen to the office real estate space. Lots to discuss. And before I get cracking on who will be discussing that, here's another quick factoid on real estate. So as promised, here's the big real estate discussion, packed table for this one as well. Lots and lots of faces weighing in on what is likely to be a very, very interesting chat. May I introduce the panelists for today? Nipun Sahani, who's partner real estate at Apollo Global, Jitu Virwani, who's chairman of the Embassy Group, Shobhit Agarwal, MD and CEO at Anarok Capital, Amit Bhagat, CEO and MD at ASK Property Investment, Mohit Malhotra, who's MD and CEO at Godrej Properties, Murli M, who's chairman and MD of Shriram Properties, Kunal Shah, partner Tri-Legal, and steering that ship will be Madhurima Nandi. This conversation up in just a couple of seconds. Stay with us.
Good evening, everyone. Welcome to our virtual panel discussion on real estate at the Mint India Investment Summit 2021. In today's session, we will look at some of the changing ground realities, recovery, and the challenges faced by the real estate sector in India, as well as some of the emerging trends redefining the space as we face the second wave of COVID-19-led disruption. To understand this better, joining me is a very, very interesting panel of speakers this evening. A warm welcome to all of you, and thank you so much for joining us today. Without further ado, let's jump right into the discussion. Mohit, let me start with you. There was a clear demand revival in residential up until March. What is the current situation like? If you could give us a sense in terms of customer site visits, new transactions, conversions, and just the overall decision making among home buyers.
Thanks, Madhurima, and good evening, everyone. See, we had a major revival in residential space in FY21, and despite COVID hitting us very hard, I'm talking about last year. We saw a very strong traction by people, wanting to buy homes. I think there are a couple of reasons for that. One is, the real estate residential prices are at all-time low. It's been almost 8 years of a down cycle. So if you adjust for inflation, the prices have actually come down quite significantly. The second is, in terms of affordability, it is at all-time high. The repo rate at 4% is at historical low. The mortgage rates are now available at below 7% to consumers. So I think that kind of also created a opportunity where people felt this is the right time. And the third big reason was, I don't think we have spent so much time in our homes as we did in the last 1 year. and everyone understood the importance of home, and also the importance of a well-designed, thoughtful home. So all these factors, made people buy residential homes, and we saw a major recovery in the second half of the year, and across cities and across developers. There was a very strong momentum. We ourselves saw extremely strong traction in our sales in the year. Now, if I have to specifically talk about right now, I think right now it's a huge crisis going on at a personal level for all the people. Everyone I know has their families impacted through COVID. There's a lot of issues which are happening. So I think current crisis is at a pretty alarming level, and I think there's a bit of a psychological safety issue going on in everyone's mind. So there will be a disruption in this quarter for sure due to this pandemic, but I think the long-term trend is very healthy, and I think once the things stabilize, we should continue with the strong recovery which we saw last year. So very optimistic on the long-term trend, but we should expect a disruption for the next 3 to 4 months.
Sure. On the same note, hi Jitu. So you
Hi.
have you have a significantly large office portfolio, and alongside you also have a large residential portfolio, which is fairly focused on the premium or luxury segment. What are the early signs? What kind of impact are you seeing, at least in the course of this month, on both the fronts?
So honestly, I mean, like I know everybody was a little bit surprised that the resi demand started growing, though everything was shut down in the earlier lockdown, and we see the same continuing. And we've had great sales in, but surprisingly, some people thought it was in the luxury sector because people want to move to bigger homes. But I think it's not just the bigger homes. I think just people just want to be in a nicer home, nicer development. So we are finding a huge upsurge in luxury sector, and also we have the other model which is called the Embassy Edge, and which is a little bit out of town, more open areas. So we find very good sales in that kind of segment also. Similarly, we're in the process of doing this merger with India Bulls Real Estate, and we've had some huge sales in the India Bulls portfolio also. India Bulls has done really well for ready apartments. So I think basically good quality homes ready to deliver, pretty much which is ready, is I think where the demand is quite substantial. And this is continuing. I mean, I know the second lockdown has come, but still the purchase of homes has been, on the rise. I think a lot of my colleagues on the panel will probably also acknowledge the same thing. While on the office sector, it continues to grow. I mean, I know there is work from home, all these kind of talks going on, but we find that some of our existing tenants, and as far as Embassy is concerned, we have actually 73% repeat tenants in our portfolio, and they are still monitoring some of the, what do you call, projects which are to be completed, or space which is to be handed over. Companies are still on weekly calls, monitoring even like 4 or 5 days delay, on a very serious basis. There's been some sign up in the lockdown, also from existing tenants. We've had a particular tenant who we still have to hand over 1 million square feet in November, but has already exercised hard option for 500,000 further options. So and there's a lot of big demand coming in, and I think there was a statement from TCS also some time back, and the whole digital platform is growing hugely in the world, and I think a lot of business is coming to India. So I think this is going to continue. Hopefully, with the pandemic and this wave coming down, everybody get their second shots now that the government has opened it up to 18 and above. I think by September, October, maybe latest by year end, it should subside, and people start coming back to work. We found even in our flexi office, we work just before the second lockdown came in. I think probably it was in the news also. They had the best quarter of 10,000 seats, and things were just coming back. And of course, it's been a little setback now because of the lockdown. But the fact is that if this lockdown didn't happen, people were willing to come back and start signing up and coming into offices. So these are private individuals, small town entrepreneurs, and a combination of enterprise. So as enterprise companies give the green signal to their staff to start moving in, the parks will get filled. I think the only reason probably we have like 10% occupancy in our parks is because the companies are holding back with the decision for getting their employees in. I think, but it's not per se people who don't want to come. I mean, look, people are, kind of wanting to come back to work, kind of go back to the normal way of life. And I think a lot of people are kind of tired or fed up with working from home. And hopefully, I think it's just another cycle which will go away, and I think things will be okay. I don't see any reason why somebody might apply for leave in future saying that, I've got corona, I'll come back after 5 days. And it's going to just be another virus and we have to live with it. How long can we be scared of something and continue to live like this?
Yeah, that brings me to the next question, Nipun. As a global, investment manager, what do you think has changed in the last 12 months? Are you looking at a new asset class, a different section of developers, or just looking at projects differently and, probably recalibrating your, return or profit expectations? Would you share your perspective on this?
So I think for international investors, very hard to generalize. One answer is courses for horses. Different investors are pursuing different strategies. Some are very focused on the office segment. Some are entering, logistics, warehousing. There's new sectors like data centers opening up. So it's very hard to generalize. Depends on what's the strategy. Most global funds don't come through a country-specific strategy on India. Most global funds enter through continental or global funds. So I think it's more than the opportunity. They also rarely come directly. They all look for partners. So I think whatever is the partner selection ends up determining your strategy. We have developers on this call. They've partnered with global investors, and each has partnered, let's say with Godrej on the residential side and Embassy on the office side. So I think every investor comes with their own strategy. I don't think that has fundamentally changed. I don't think people have just started opening up. Yes, new sectors will come up, but I think bulk of the investment, just dollars, just go into office and residential. And the domestic market is starved of capital. NBFCs have pulled back. Banks were never in the game really in terms of risk capital. They were more rental discounting and relationship lending. So I think most of the capital is sitting offshore and coming through just different strategies. And I think the key thing which has changed is India should not get complacent. That there is obviously this pandemic which is being handled, but I think policymakers can get complacent that yes, capital is already been coming into this sector. If you take over a 10-year period, I would think more than $50 billion has been invested, but money can go anywhere. Global money moves with opportunities. There are many other countries competing for it. And, I just think that somewhere I would not blame the government, but regulators are putting hurdles in the path of investors for various types. And that's not really at a government level, but there are various branches of government, regulatory, tax, etc. And they're just putting hurdles which can piss off investors, make inefficient returns, and that kind of just will take money away from India, or allocations might come down. So I just think there is an amount of complacency and lack of coordination and lack of understanding of detail. Just the level of detail. REITs was a very smart regulations which came in, but I think international investors will continue to do it if there is a proactive approach on the policy making side.
Sure. So, I mean, in a year like 2020, which was, which saw, obviously sharp disruption, somebody like Apollo, were you in a wait and watch mode? Were you looking for opportunities? Would you throw
That
some
was
light
the
on?
busiest year for us out of the last say, couple of years. We did 26 transactions in the last 12 months, which is in some ways must be the highest in the industry. So it was a really busy year. So I think opportunities and the environment like this, where there's fear on the streets, I think that's a condition where Apollo thrives globally. We've had record deployment in several markets we are active in, including India.
Sure. Mr. Bhagat, given what happened post the IL&FS crisis in 2018 and the whole disruption also due to COVID last year, domestic, it's also, apart from NBFCs, it's also had an impact on private equity players like ASK, for example, or others. You've been cautious and in a wait and watch mode. In 2021, do we expect the kind of demand that is there for capital? Are we going to see you finally going out and doing some deals this year?
I think it's a question of fear and greed, as Nipun has also mentioned. We had the highest deployment in 2021, purely because there's no capital available. If you look at last 6 years journey, there have been more downgrades in the Indian real estate than upgrades. First, the debt equity ratio, debt to asset ratio is in favor of the top 11 developers, and that is why the top 20 developers have seen the consolidation. 2019 was probably one of the worst year for residential real estate as a sector as a whole. Because of consolidation, the top 11 or 20 or 25 people were benefiting. I think the opportunity today is so lucrative that if you can understand the risk associated with the sector and manage the risk, I think it's a very counter-cyclical opportunity where returns are like equity and the structures are like debt today. And it is in favor of offshore investors because of the tax advantage which they get vis-a-vis domestic investors. And hence, I think we have been looking for opportunities throughout the year. We invested in September quarter and even in the quarter ending March. We will continue to look at these opportunities. And if you look at the top 11 players, they have been understanding how this opportunity will pan out for them. And they have raised some 44 to 50,000 crores in the last 6 years. Whereas the small and the mid-income developer, mid-sized developer has only been able to raise approximately 2,800 crore in this 6 years. So I think it's a capital play. NBFCs are not lending at all. Their book, their share in the entire pie has reduced from 45 to 39%. And I think it's a wonderful opportunity for every player who has capital to deploy money in the residential space, which was not a preferred segment of real estate till 2019, has turned out to be in the pandemic one of the best segments of real estate. So we are very bullish on this sector, and the importance of a house has never been felt more, and a bigger house where an extra bedroom is required for being used as an office or a study for the kids. I think we have never seen this traction, and the traction was across. We saw luxury coming back in March before the second wave. We have seen plotted development in second homes. We have seen Goa becoming the most attractive destination. We have seen strata sold as commercial achieving 2 times of its target in 2021 because there was no other opportunity for even retail investors to deploy their money. So I think we are in for a sustained growth going forward, but for this second wave, which will cause disruption, and we have to live with it.
On a more optimistic note, so Mr. Murali, first of all, congratulations on filing your DRHP. Interesting time to file the DRHP, but so residential sales, as we have discussed in the past, have been good for you over the last 2 quarters. Then, of course, the Lodha IPO happened, but we are sort of back, seem to be back to uncertain times again. What are your expectations and worries at this point of time? Both in terms of course, the business, because you're largely residential focused and mid-income focused, but also from the investor side, because if all goes well, we'll probably see your IPO happening sometime this year?
Market is doing extremely good, as some of my friends have told me in the beginning. The demand has been one of the best in the last 20 years. As Mohit said, prices have not gone up, so that's also a big advantage for the customers today. They have the best of best today in the country, whether it is a home loan or whether it's support through PMA scheme or the real delivery which is happening. And as Amit was pointing out, the top 20 developers or 30 developers, where the delivery is guaranteed. So customers' uncertainty is gone to a large extent, which was the case some time ago. Now that has been removed. So I would say this is the best period, and government has handled this pandemic exceedingly well. So yes, this pandemic was unexpected, has done very well, but for the last few weeks, things have not been good. But for this, I think things will be very good. I'm sure government is making all the efforts to make sure that this current crisis, what we are going through in the last 10 days, also will be handled well, is the expectation. One major positive point, all over the world, people have fixed this, COVID to some extent, larger extent. Whether it is UK or United States or some of the Western countries, they already found a way to fix this. So India, probably we took little easy in the last about month. Hence now we are paying a big price. I'm sure we have very capable government to fix this, and they are fixing it up now. So it's maybe the first quarter could take a hit for all the developers in terms of sales. But like last year also, when the COVID hit us first time, first quarter, second quarter was a major hit and then for quite a lot of people, everyone almost. But the third quarter, the way it came up, something phenomenal, and fourth quarter was unstoppable. So now even this year started well, but for this, so we might have some dent the industry in the first quarter, but it'll come back nicely in the second quarter because things have become much superior. Demand will only go up, as again Jeetu and Amit were talking about. So the investment class today, customers do not have any options, and home is the place they will come and invest lot more money, or real estate is the place. Starter sale he was talking about. So starter sale will become another major avenue for investment into real estate. So we are extremely bullish, and capital market is one of the best today as we speak now. So, and plenty of capital has been flowing into the country, and government also has done, phenomenally good job in delivering one of the greatest budget ever after 1991. So things are looking good. We are extremely bullish. 21 will be a great year for everyone. But only one thing is, people should start looking at how to manage. This is not only one COVID. I am sure there could be some more biological weapons can come and hit the world. If not 21, can be 22, can be 23. As people, we should be, as an entire world, should get ready to manage this kind of biological war, which are likely to unfold in the next few years. But as a nation, I think we are pretty strong today.
Sure. Shobhit, despite the kind of disruption that we saw last year, we saw 2 office REIT listings, and then this year, of course, we saw Lodha's public listing, and all of them saw significant overseas investor interest. How do you think, the second wave now, will impact, the M&A activity as well as, general deal making, this year? Shobhit, I think you're on mute.
Sorry. A same pretty pointed question. I'll try and be predictive. I think lots of things have already been spoken. But to get to some sort of sense on what's going to happen, I think you must focus on public markets that have been holding up even through this second wave, which has been a disaster. I think the belief is that we will come out of it very quickly. And that's why if you see what's happening on the public market side, not a day has gone by where it's not responded. In fact, it's stable or looking up. So that's a clue saying investors in the market believe that things will hold up. Unlike last time, where stock market just crashed in March, right? So this is some clue. Second, I think we've all been looking very inward and saying, what's happening in India, and it's not a pretty picture. But if you look at globally, right from New York to Australia, every country has done record residential sales. So there are only two asset classes where the world has been investing. That is either making homes or beds, if I would like to call, in sheds. That's your logistics. So these two sectors have just been doing outperforming around the world during pandemic, coming out of one pandemic season, call it the first wave, now the second wave. Difficult to predict whether the second wave is going to prolong, but the feeling is that it'll all come under control with vaccination, oxygen, medicines all coming in. So hopefully we'll be out. My view is that residential will continue and demand will continue to come back. Near term, I think everybody on the stage said one quarter is going to be challenging, but I think we've learned to play the full game in one half last year. I think we're going to do a repeat this year, that H2 this year will be very strong.
Sure. Kunal, would you give us a sense of what your expectations are in terms of the in terms of the challenges that the sector may face? Any issues in terms of foreign investment? Do you think even after the kind of global attention that the second wave has got for our country, will foreign investors still be willing to come in? What are your thoughts on this?
Thanks, Madhurima. I hope everybody and their families are safe actually to begin with, because currently I think it's all about just riding out this second wave, like most of the panelists have mentioned. Looking ahead, and the expectations of foreign investors or generally the sector as a whole, I think what happened last year is quite educative. I think the panelists have mentioned that while the first quarter may have been slow, the subsequent quarters have really picked up. From our perspective, we actually saw the busiest year, as far as foreign investments in real estate are concerned, or just transactional flow is concerned. So I would say that, on an average, if we saw 20 deals in a year, we saw close to 40, 50 deals last year. So I think the transaction flow was quite heavy. I think also the transactions which occurred amongst maybe the top 15, 20 developers, the top 10 funds, and maybe some banks and NBFCs, if at all, which were active, albeit their activity was in disposing of their portfolio as opposed to making new investments. So I think that's some amount of activity that we did see. From a foreign investor perspective, and I think anybody with deep pockets, I think this is a time of great opportunity. Prices have rationalized to some extent, especially in the residential space. Prices have not gone up in some markets. In some markets, they have rationalized. In some markets, they've actually reduced. So if from an end customer perspective, this is an opportunity to buy. And with that opportunity to buy is also a time to deploy additional capital. So whether you look at fresh projects or stressed projects, I think we saw a lot of activity in stressed real estate projects last year, with rescue capital being deployed. Apollo was one of them. I think Nipun briefly spoke about that. But a lot of funds have been active. From a regulatory change perspective, I think some of the relaxations that were brought about last time around, if those could be continued, the reduction in stamp duty, for instance, that was a game changer for as far as residential space in Maharashtra was concerned. If that could be brought back. On the AIF regulations, there is sometimes lack of clarity on what a private AIF can do as opposed to, a government, sponsored AIF can do. So I think if there can be parity which is brought on how the private players will operate vis-a-vis the government players, and I think that would be very, very helpful. I think what the government did well last time and was well supported by courts is to bring about a little bit more predictability around the regulations. And I think from a foreign investor's perspective, if there is predictability, then they can factor in the risk or price in the risk So I think if the government can continue to do that, and if the courts assist in that, predictable rulings, predictable outcomes, that would be very helpful. So I think, yeah, those are a few things that we could do to whenever investment starts again. Though to be fair, we are doing a couple of deals even right now. Deal flow is not stopped. It's just maybe slowed down a little bit, but deal flow is not stopped. So if predictability could be continued and some of the relaxations that were brought about last year could be continued, I think it would be very good for the economy as a whole and specifically for the real estate sector.
Sure, sure. Jitu, coming back to you, if everything was okay, we were all expecting offices to sort of open up gradually by June. I know it's uncertain and it's a little difficult to sort of foresee what's going to happen. But where do you think the commercial sort of office market is headed in terms of the pace of leasing, which obviously went down last year? Do you think the wait for the sector's recovery will get a little longer now, and we'll only see that happening towards the latter half of the year? And also, if you could tell us a little bit on, you have so many global tenants, tell us a little bit about how tenant behavior is changing. What are they asking, for a lot of things now? Give us a sense of that as well.
Firstly, as probably you saw REIT results announced yesterday, we had 99.8% collection of rent.
But that was March quarter.
So going forward, I think we don't have any much disruption from any of our larger tenants. I think maybe a little bit of decision making on moving spaces. So there are tenants who are looking to cut down space, but then there are tenants who are looking to ramp up space also. So it's honestly each sector how it's performing under this pandemic. So there are companies who actually need more space based on this pandemic, and there are companies who are coming down. But we didn't really find such a significant disruption in our business and demand for office space. It still looks buoyant. The future demand and the RFPs coming out, and Bangalore specifically, and which is like pretty much 70% of our market, and is still on the high. There are the new companies who are actually looking to sign up space are all $1 million plus. Unlike earlier was like 400, 500,000. So the tenant base is becoming larger. We're quite bullish. I mean, in this pandemic, we've bought 2 pieces of property, which is would involve roughly about 11 million square feet of office space. So, and that's also based on, as you're aware, last few years our growth is based more on our watching our clients grow than anything to do with real estate generally around us. And since we have the pulse on the ground and we're well connected with our tenants, so we're quite bullish. Its predictability also wise. It's next year. It says as it'll be about 40 million square feet leased out in India, which will be pretty much 22% higher than last year. So the demand for office space still seems buoyant. I mean, and the similar thing we are seeing in our flexi office space WeWork section also, where companies are looking at different flexibility. So there are different needs for different size of companies. So there are smaller companies who are looking at working from flexi office where they can ramp up or ramp down quickly. They can be in different locations. They get access to office space, but the larger tenants are still growing. I mean, I wouldn't name, but one of our tenants who's got close to about 1 million square feet with us actually signed 650,000 in the pandemic and is right now negotiating for 2 million square feet.
Okay.
In Chennai also in Park, some of the tenants who first had reduced some space now have come back and have increased the take up. So I think it's all about managing the construction and basically, I mean, as far as embassy is concerned, our biggest challenge is now actually the time taken to get money from the banks to deploy it construction for the construction on the site. I mean, I think we're spending more time, and like Kunal mentioned, I mean, last year was the busiest year. We've also had lots of deals, as you've heard over the time, and it just continues. I mean, I think there are a lot of deals to do. It was quite a busy year last year, and hopefully it will be one this year too. So I think with the interest rates down, raising it up, I think the real estate outlook is really good ahead. Of course, unfortunately, it's going to be ruled by the Ps because they're the only ones who have the money, and the banks who are sitting on lots of money are not parting with some of the money. They don't know how to deploy the money, but I think that also will change because recently I was on a call with a banker and now they're trying to start exploring that they should start lending again to the real estate sector because how long can they keep the money? And I think what has happened also is that there's been a lot of cleanup in the real estate sector where there are developers who have defaulted, there are developers who stayed steady, ones who have had deployed the money correctly. Projects are getting built, sales are happening. So I think it's a way of working. And I said this earlier that I don't know of many developers who actually gone down even financially because of any greed, but more because of their being over positive and things like that. So slowly it'll come back because the foundation is strong. See, culturally, most of the people in real estate in India are ethically very sound people. So I think slowly it'll come back, and the demand is there. So that's the most important. I mean, if demand is there, it's on residential is on completion, it's on track record. I mean, like you said, Murli is going for an IPO because everybody knows that he'll build, he'll deliver. So for him to sell up his stock is easy. One of my good friends, Irfan Radha, Prestige is doing extremely well in selling their residential stock as and when they launch projects. So I think it's just there's going to be a lot of mergers and acquisitions, and this is something which we're also actually really looking forward to completing our merger with the India Bulls Real Estate, and then looking at additional mergers after that. And I think if you go by the book, there's enough for everybody on the table, and I think the banks have no choice but to reduce interest rates and lend again. I mean, they have no choice. I mean, what are they going to do with the money at some point? They have to crack up. It's just a game of patience. And then even I think some of the Ps on this panel may have to start looking at their hurdle rates a little lower. Otherwise, it's not going to be easy for them to deploy money over their time. So I hopefully, that's something which people like me and Murli are looking forward to.
Mohit, coming to you on the back of the whole revival in residential demand, which we witnessed, it was also expected, and I remember reading one of your interviews earlier this year where you said that that the recovery in demand will also be followed by a price recovery, in the course of a couple of months. Do you think that gets delayed now with the second wave led disruption, and or do you think there is scope for developers to go out and raise home prices?
Yeah, I think as I mentioned earlier, the article which you're quoting, the price hike would follow the volume growth. We need a sustained volume growth for a couple of quarters before one can realistically expect price hikes to happen. But of course, it's been 8 years. It's been a long time. So whether it happens in a year and a half, but it will happen sooner than later, and it will be a sharp hike. Anytime real estate prices don't do a step, don't do an incremental hike, it will be a step jump whenever it happens. But really, this second wave is a disruption probably for 3-4 months. The good news is the vaccines are already out. So it is about, and once the government focuses on something, we are quite efficient in getting things done. So my personal view is that in next 3 to 6 months, a lot of people would get vaccinated, at least in the major cities. And as Shobit was saying, H2 would be another record blockbuster year for residential real estate. And I think I would say any price hike would be probably next year in the best case scenario.
Okay, sure. Nipun, given what transpired, last year, do you think, both funding institutions as well as home buyers sort of distinguish and, are giving clear preferential treatment, to, so-called corporate developers or the tier 1 developers who've done well over the last 2-3 quarters and are growing stronger. And Jitu, for example, mentioned, some developers doing well. Do you also anticipate some amount of consolidation that will happen even in the residential sector in India?
It's already happening. I think data might come with a lag. We've seen it play out in the office segment. Uh, uh, there is a distinct advantage that scale gives you. And apart from synergies of executing projects, which also must be there, and developer friends can touch on it when you buy things at scale, etc. But one of the biggest competitive advantages that large scale developers today enjoy is one, access to capital, and two, cost of capital. That is a very big advantage because real estate is a capital intensive sector. And I think capital does gravitate to larger players. It could be different forms of capital, but clearly, I think that consolidation gets accelerated because of that. A lot of cleanup because of RERA and where unethical developers, I think a lot of them are weeded out of the game already. That happened, go back 5 years. But I think the pandemic, this one disruption is more to do with execution. And if you see the balance sheets of the top 20, 30 developers in the country, they are probably modestly levered. There's a few who have high leverage, but most of them have modest leverage. So I think cost of capital, the struggle is really the mid-tier guys. Mid-tier guys struggle for equity, struggle for debt, and mid-tier has different definitions in different cities. And I think there is still going to be a large market. Unlike office where you have 4 or 5 players in every city, I think residential will still have a much bigger number. But whatever the number was at peak, I think I heard at one time that the top 5, 7 cities alone had thousands of developers. But I think that will boil down to maybe a less than 100 in a 80-20 rule, where 70-80% of the market share will be taken away by the 20%, 30% of the developers. So I think that is well underway, and that will only get accelerated because of the pandemic. And it's same on the capital deployment side. While there could be many funds, but if you see deployment wise, some of the larger funds are ending up being the biggest capital providers. And I guess it'll, same be on the lending side, even on the domestic side. HDFC and ICICI will end up being the lion's share. Domestic market characterized by there's water everywhere, not a drop to drink, right? So there's a lot of money everywhere, but nobody's getting it. So I think that will also play to the advantage of larger developers and further accelerate the consolidation.
Yeah, I mean, Mr. Bhagat, I mean, I want to ask you the same question. When you are going out and, giving money, are you again only considering that top, rung of developers, in the few large metros? And, though the demand for capital is actually probably in the next tier of developers, but is it mainly those few top developers who will be getting, a lion's share of the money?
So I think to answer your point, the top 11, and out of which say 9 or 10 are listed because they have access to cheap capital and their cost of capital is very, very reasonable. And I was looking at some data where their average cost of borrowing is around 10%, whereas the mid-segment developers have 16 to onwards. So I think that gap will continue, and that is why it is leading to consolidation, because they have the brand on their side, execution, no completion risk, and cost of capital. But when we look at opportunity, I am not looking at the top 10, but the next 10 or 20. And because there is going to be room for 5 to 10 players in every city, the top 5 or 6 cities I'm referring to. But the demand, as you rightly mentioned, is also in tier 2, tier 3 cities. Because if you go to places like somebody launched a project in Bareilly and he said it was sold out on day 1. So I think the demand is everywhere. We will continue to focus on job creation markets as private equity, because we don't want to go and take a risk of tier 2, tier 3 towns where the job creation is not there, but it is basically migration demand and upgrade demand. And you will see that other than the listed players, everyone is also decently leveraged actually. I mean, the mid-segment developers, their debt-to-asset ratio is around 62%, whereas the top 11 players are at 22% debt-to-asset. So I think as private equity, if we have to do equity, we will go to the top 11. But if we have to go get into a counter-cyclical opportunity of getting equity-like returns and a debt-like structure, I would prefer to focus on the next 11 or 15 to answer your point.
Sure, sure. Mr. Murli, as a company, Shriram has, been focused, fairly consistently on the middle income housing segment in southern Indian cities, over the last many years. When something like COVID happens and the disruption that happened last year, what do buyers want at this point of time? I know, remember in our discussion you've mentioned, people want bigger houses, etc. But are there, any sort of, fundamental changes that have happened in sort of home buying patterns in terms of the way you're designing your projects? I know you've entered into plotted development now, so those are selling well. But are there any fundamental changes that have happened in sort of home buying behavior?
Not really much, except the number of buyers have gone up. And I mean, the sizes, there is definitely a need for increase in sizes. Extra one bedroom has been added. Either one full bedroom or a small room has been added. In fact, some of the projects we went back to the drawing board and changed wherever we can accommodate. So there is a clear demand. Sometime in last October, it started. So sizes have become larger, and more home buyers. There is another asset class which has come up now. For example, co-living. There is a lot of investors who are coming and willing to do it at a 4% yield or without appreciation, asset appreciation, 3 to 4% yield. A good set of investors are coming. So again, they are looking at something smaller units, whereas real end users are looking at slightly larger units. And individual homes, there has been a good amount of demand. So which was lacking some time ago, which has come in now. So overall budget also, people started allocating extra money for their home today. So in fact, earlier if they had set aside about, let's say, 50% of their income, now they set aside about 70% of their income, which means they have not reduced their expenditure, but they have reallocated their expenditure pattern. So which is a very good sign. And more than everything else, the government support in making sure that the funding is available at the lowest rate, and a lot of support from the government side, which has helped us. So we are from Shriram Properties point of view, it's not only Bangalore, Chennai. Incidentally, our Calcutta project has done phenomenally well. During this lockdown, since last April, we have sold over 1,000 units in Calcutta project. Again, it's affordable housing. There has been a very good demand, and not only that, there has been a good demand for other asset classes like warehousing. I mean, data center. In fact, somebody is discussing with us in Calcutta for a data center. So there has been a good demand. We have signed up a space for data center in Bangalore now, small space. There has been a good demand on new asset classes. So things are really looking good, and customers are looking at. Now there is one thing which is coming to customers' mindset is this delivery. Yes, as Amit said, top 11 or top 20 people, you are sure about the delivery part. That's most crucial one. So hence now there is a kind of a comfort and confidence with the customers. Hence, things are really looking good. And as Jeetu said, we should be done with our IPO. Hopefully, with the capital market support, we should be able to get that done. Things are looking very positive.
Shobit, tell us about what your expectations are from this year. Are developers going out and raising money? Are we going to see more deals happening? Could you give us a sense on that?
Yeah, you happy to do that. You did bring in some sense. I think the panelists here are resounding one common theme, that big is getting bigger, both on the developer side as well as on private equity. The people who can deploy, are getting sufficient money and responsibly are getting hordes of money behind it. So deals are getting bigger. Last year, we saw nearly $2 billion deals, which are unheard of in any previous year. This year is also starting with a bang. I'm talking about financial year for India, so it's going to start with a big deal again. So we think that this year, as Amit mentioned, Nipun mentioned, Jitu also said, opportunities are large. There's enough interesting transactions, whether it's in data center or residential or offices and even logistics, where we'll be able to see a large scale consolidation and new deployments. So I feel that this year will be bigger than last, and that has been trending as well. So we just put out a report a couple of weeks back, and it's a clear trend on how much foreign capital and domestic capital is getting deployed in this sector. I don't think anybody is doubting the demand as of now, whether it's resi or it's office. I think that's very clear. The demand is there. I think it's only about right product, right size, right market. And Murli mentioned that assurance of delivery. I think if you deliver, it'll sell, right? If people believe that you can deliver it, it'll sell, and you'll get money. I mean, there's plenty of money, whether it's debt capital or equity capital. I don't. There's a huge wall of capital that's just sitting there. We just have to fare through this near-term situation, and hopefully, like Murli said, government will be able to get back control and bring it under some order very quickly.
So Kunal, tell us on a more pragmatic note, given the kind of disruption that we've seen just in this month, do you think everything gets pushed, whether it's sales momentum, demand, even project delivery, etc., to the second half of this year? I mean, do you think whatever plans developers had, or in terms of deal flow and everything else, do you think it all gets sort of a little pushed and delayed to the latter half of the year? What do you think will be the main challenges that the sector will face in the course of this year?
So I don't think there's a generic answer to that. In fact, a lot of developers and funds are looking at this as a bit of an opportunity right now to spend time in, let's say, getting due diligences done, getting transaction structures finalized, and doing all the back end work, which potentially can't be done, when they're when things are again, standard and in play. Even from sort of an end buyer perspective, I personally got many calls from developers for sort of an online showing of under construction projects with potentially a discount in prices, and this is in the regular and in the luxury sector. The other thing that at least I've noticed, less from a legal perspective, but just in the market, is that vacation homes have become a big, a big sale recently. So whether you look at outskirts of, New Delhi, Mumbai, Gurgaon, Bangalore, all these places, vacation homes is a trend which I've been seeing. And even in, comparatively far off places like, let's say, Himachal Pradesh or Uttarakhand, have known of developers in those markets who were looking to raise funds and capital for vacation homes in those spaces. So to some extent, things will be pushed behind, similar to what happened during phase one. I think what would be good is if everybody, all the relevant players, use this time to actually make their plans and sort of fructify them in a more concrete way. So once this second wave hopefully is dealt with, and a large part of the population can be vaccinated, you can start executing them quickly. And I think at that stage, hopefully the government, the judicial system will also be ready to assist the private players in this market. So if there are more relaxations that can be given, more incentives that can be given, that would be quite helpful. So yeah, I think that's what we can do right now to prepare for the future.
Okay. Before wrapping up, I just want to quickly ask Jitu and Mohit, on Jitu, in terms of launches, in terms of, completion of projects, do you see any serious impact and delay this year?
So as of now, I mean, construction is going on. I mean, frankly, wherever I think there is money available and there's cash flow, the construction is going on. at the pace it was going on. But I think the second wave, we really got to see how the impact on the workforce is going to come. Right now, we've got most of our contractors actually trying to give all the workers the first jab, so to make sure that they have to stay for 8 weeks to get the second jab, So that's one way of keeping them, letting them disappear on the sites. All the contractors, because they've experienced from the last year's thing, so they are doing everything to make sure the workers stay. And also, most of the workers have experienced that going back home and coming back was more disruption for them, loss of, money for them, and all and putting themselves at risk. So we're hoping that that doesn't happen and sense prevails and they all stay here and continue to work. So I think people are a lot much braver, though there's much more damage happening now compared to earlier. So, and I think as like everybody mentioned, that as long as there's cash flow, these projects will continue. There might be a little bit of delays, but I don't foresee very large delays due to this, unless this things get worse and the government really clamps everything down. But we've been positive throughout, and already it's like more than a year past. Everybody thinks Corona will disappear, but I think it's just continued. But I think it seems like everybody is more confident of doing things. And mainly, like I said, and what you're hearing from all the panelists, that you see the demand is there, whether it's Resi, office. In fact, somehow the demand is there more than when there was no Corona. So I think that's the biggest take home, and banks are beginning to realize. So interest rates will drop. I hope some of the Ps also start doing that, because soon, and there's enough money for developers to have a reasonable amount of margin to continue and do the same good work they've been doing at a pace. And profit is in our country. This was always there. Money to be made is there, because there's also, to the size of the country, there are very few people involved in infrastructure and construction, and few people there who have got execution skills. So it's really important. Actually, strangely, I don't know if you notice it, that we have a huge real estate exposure or opportunity, but there are very few people behind it. So that itself shows that this industry will be stronger, and there's a lot to be done here. So my at least positive take home.
Mohit, quickly, do you want to just add to that? I mean, I know Godrej had planned a significant sort of pipeline of project launches this year. Does it go off schedule? Are you sticking to the plans that you had?
Yeah, we are sticking to the plan, Madhurima. And last year, in the first quarter last year, we actually, when everything was actually in a terrible lockdown, we ended up doing close to 1,500 crores of sales online. So we have a backend ready. We actually did 3-4 online launches last year. So we're pretty much ready to do those launches even now. And our digital systems are totally ready to handle these kind of situations. So from a sales perspective, we'll go all out like we did last year, and I don't think there will be an issue. On construction side, as Jitu said, there could be a bit of disruption if labor starts migrating like they did last year. Hopefully, there's no sign of it right now, but it all depends on how things will play out in future.
Sure. So I think that brings us, to the end of our discussion today. Thanks again to all of you, for joining us today. Thank you so much.
Thank you very much.
Take care, guys.
Thank you. Stay
Thank
safe.
you.
Thank you.
Exhaustive conversation there about real estate, a very important sector, and I think so much that came in by way of opinion. Before we wind down, this is our last day and last session. Another quick shout out to all our sponsors. Thank you very much for making this conference happen. Our presenting partner, Tri-Legal, our co-sponsor, MIDC, the Maharashtra Industrial Development Corporation, and of course, our associate sponsor, CoinDCX. Also want to give a big shout out to the Mint team. A conference such as this scale, and to do it virtually was not possible without a lot of teamwork. So a big thank you to everyone from the Mint team that pitched in. From all of us here, goodbye. We hope you stay safe. We hope we meet again in different circumstances. Thank you for being with us over the last 3 days. Goodbye.